Okay, I think I'm live now. As you can see, I'm back in Canada for anybody out there. When I did the market outlook today, I said that I would do a live session tonight at 7, and YouTube tells me I'm live to do the Q&A from last week's market outlook because I was flying that week. Well, I was flying on Wednesday, and then I had to get ready for live sessions. So that's what I'm going to do, and I'll keep monitoring the chat. For those of you on the on the video now or the live feed now, I am in Canada, so I do have a better internet connection here. I don't know if it's a better internet connection because I got the same speed there that I have here. It's just I don't have concrete walls, so over there I have concrete walls, and I guess there's a problem when you have concrete walls. So I have been given some suggestions, and there's an IT person that's going in next week while I'm away to upgrade the connection that I have. Let's see. Jay Powell speaking tonight on CBS. Yeah, I think that's going to be more broad. I don't think it's going to be anything specific. I think it'll be very broad. I don't think he's going to tread on any policy statement at all. I think it's going to be more of a bigger, higher level discussion. Has that LinkedIn Donnie being destroyed? It's like a virus, right? When something gets out there and everybody has it, then everybody wants to be the hero when they start sharing stuff, right? Because they use it to try to build their audience and thank you for sharing. Thank you. It's like, no, not thank him. Thank me, not thank him. He didn't create anything, but what are you going to do? What are you going to do? There is a cultural element to it, which you're never going to beat. You're never going to beat. So you can only get so angry with it before you say, wow, look, this is not new. It's not new. That doesn't mean that we just going to sit back and take it. But if nobody wanted our stuff, if nobody was sharing it, they'd be sort of like, what's wrong with me? So I know there are some prep providers, smaller ones, there you never see their stuff being shared because, well, let's face it, nobody wants it. Excuse me. I think I got a big bug in the house. I'm used to having big bugs in Costa Rica, like big spiders. Like I've had spiders like that big on the walls, big wandering spiders. But it's winter here, and I see a bug on the floor. I don't want to kill it, but let's answer some questions, and then I'll go to the Q&A. Sold $12 puts on ABR expiring March. Do you think I should have waited till after earnings? I don't think so. I'm interested in earnings. There are three things I would look at: is the dividend. I don't expect an increase in the dividend, but I certainly don't want to see a cut in the dividend. I don't think the dividend's at risk. Loan loss provisions. It would be, I think, unbelievable if there wasn't an increase in loan loss provisions. I get it. Management is good, but you can only do so much. There's a certain reality in the environment you operate in. And if they were attempting to push through a no increase in loan loss reserves, it would be like, that doesn't fit the environment. I know you're good, but you're not magicians, right? So there'll be an increase in loan loss provisions. And then it's the fourth quarter adjustments because these are audited statements. Are there any significant fourth quarter adjustments that reverses something that was done in a previous quarter? Because then that calls into question the quarterly statements at that point. Sequentially, year over year, do I expect earnings to grow? Not really. I do expect them to be down. The market expectation is that they're going to be down because you do operate in an environment, and the environment is hostile. So It's not a question of, well, you didn't grow earnings. It's can you hold your own and still generate positive earnings in an environment like this? And if you can, if we do have a lower interest rate environment going ahead, things can only get better. So that's what I'll be watching for with ABR. I think they're next week. Market rally all-time highs, yeah. Past level 1 in November. I'm getting absolutely crushed by some of the level 2 content, but your videos are very, very helpful. The level 2 content can look really intimidating at first. It can appear to be really intimidating, but it's like anything. Once you know something, it's not intimidating. Go slow. Don't speed through it, because you'll speed through. You'll feel the sense of accomplishment by turning pages, but you won't understand what you're doing. There's no point in pushing on if you don't understand. The better the foundation you build, the easier it is to start turning the pages later. So, yeah, there's a lot in level 2 that can be intimidating. But do some distributed learning. Do a hard section and an easy section at the same time. Equity is long, but it's really easy. It's easy. I mean, it's just long, but it's easy. So do quant and equity. And when you get bored of quant, switch to equity. When you get bored of equity, switch back to quant. Switch back and forth. The easiness of equity will remotivate you, right? So it'll feel, rather than spinning your wheels in something difficult like quant for a while, you're going slow there, but you're making gains in equity. So it feels like you don't feel this sense of overwhelming dread that you're just not making progress. So do some of that. Purchase CV11 prep videos. What would be the best way to utilize them? Watch them before starting a chapter or after? That's a good question. I would seem, there are 2 ways that you can do this. If you're going to watch the video, then you should do a slower, careful reading of the reading itself. And as you're reading, you'll go, okay, yeah, everything will fall into place. Or you can read, and after you finish reading, you might say, some of that was a little confusing. And as you watch the video, you'd say, okay. But I think it's important to do the 2. The reason is, one of them, the first one you do, is all new information. You're not going to have any questions in your head when you first start. But the second one that you do is a repeat of the information. And as you're reading, you'll be reading for solutions to problems that are in your head, because you go, I don't quite understand this or that. You end up paying more attention to it when you get to it. So I don't think it matters which one you do, but I think it matters that you do them both. What do we have here? What would make you short the market right now? Or maybe some bear call spreads. What will make me short the market? Markets rarely turn bearish as a matter of fact. So you can have corrections that happen when a market gets too extended. You'll have some fundamental reason why there's a correction coming. But to have a bear market, you need a catalyst. You need some sort of catalyst from somewhere. Where's that going to come from? Usually you look for a sector or a couple of sectors with a lot of excess. So in 2006, 2007, the housing sector, MBS, there was significant excess there. .com, there was a lot of excess there. Had the pandemic not happened, I don't think we would have had a recession. I think we would have had a slowdown, but the pandemic was an external event, unpredictable on its own. So what would cause the market to turn around and plunge 1,000 points? At this point, an external event. It's not going to be something internal to the market. It's going to be something that nobody saw coming, that nobody was prepared for. Anything internal to the market, companies are preparing for it. So if there is some fundamental problem, a lot of companies would have already prepared for it. So it's not going to be enough. Other than a correction, it wouldn't be enough to cause a bear market. So show me the excess, and we'll figure it out from there. We have commercial real estate, which seems to be a bit of a recurring problem. We do have um, debt that is due this year that is expected to roll over. At these rates, is it? But you have a lot of money in the private credit and private real estate fields. Is that enough for them to come in and pick off assets and pick off loans opportunistically such that um, it doesn't hit the market and cause a cascading effect of lower and lower prices, which then knocks the next ones out, which causes a cascading layer of sales, which then knocks the next one out, which then knocks a whole, you're not going to know until it actually happens. That's just the unfortunate thing about these things. If we look at all the past real market sell-offs, all the past recessions that we've had from big market sell-offs, usually it was some event that was deemed insignificant in the beginning that was not well understood. And because it wasn't well understood, much of the economy was not uh, immunized from the event, or at least hedged from the event. So you need something significant. You have escalating tensions in the Middle East. Is that enough? I don't think so. There's not a significant amount of GDP there. There's not a significant supply channel there other than oil. Uh, um, if something hits that, that could be a problem. But with U.S. with the Navy there, uh, you know, I think that's minimized. Um, if war broke out tomorrow on a large scale, maybe. But if we incrementally add hostility and you just incrementally add on your way to a full scale war, it's not going to shake markets. It didn't under Bush for two wars. It just didn't do anything. So, and the world has moved on from Russia and Ukraine. It's moved on. The longer it goes on, the more it gets normalized. We've moved on. It's just background noise now. As sad as it is, it's just background noise. And as sad as this sounds, this eventually will become, unless it really explodes into something bigger, will become background noise. That in a year we'll be looking at this going, oh, come on, we still talking about this? It'll just be background noise. I don't have a catalyst. Higher valuations are not enough. You need something that the market is unprepared for, or has not prepared for, or has not foreseen. I don't know what that could be. Um, oh, what do we got? What do you make of current valuations for the mega cap tech companies? Do you think PE ratio is no longer a good metric to assess companies? No, I wouldn't say ignore the PE ratio. These companies have some things that 1999 didn't have. These companies have real cash flows. They have real business models. They have real innovations that have real use cases, not just generalized. Sorry, my neck is a little bit sore. Not just generalized, this is going to change everything, but some real use cases. As of right now, the spaces that they play in are large cap spaces. You're not a small person coming along. Their competition is not coming from behind them. It's coming from in front or beside of them. And there's what, 4 or 5 big ones really that pretty much control almost everything. You have Meta, Google, Apple, Amazon. I don't think, even though there's only 4, and economics would say, given the size of the margins they have, given the free cash flows they generate, it will attract capital. But table stakes in that industry are billions of dollars and huge network effects. Even if you could replicate their asset base, you can't replicate the network effect. You have to have some very compelling reason why people would flock to what you have. So it's going to be free. It always starts out free. What could you do? What could it be? Where could it come from? Um, Small companies aren't going to compete. They're not going to compete at that level. Given that, bigger companies can only get bigger. So the danger is not from competition. The danger is legislation. It's not going to be competition. It's going to be government saying we can't allow you guys to get any bigger than what you are. So much like Standard Oil was broken up, the danger comes from hang on. Oh, the danger comes from legislation saying enough. You can't own this company and this company and this company at the same time. You got to let it go. Apple, you can't own the App Store and the hardware at the same time. Google, you can't own search and YouTube and whatever else they're involved. You can't own all that at the same time because you can't compete with it. You simply can't compete with it because you need the eyeballs to make a compelling value proposition that somebody should be using you. But if you don't have the eyeballs, you can't get the eyeballs. Because when I show up, I say, there's no value here. There are no eyeballs, so I keep using YouTube. Go ahead, start another video streaming service that has user-generated content. It's not like companies don't try this every year. It's just going to go nowhere unless you have the eyeballs and the massive scale that YouTube has, which means you have to offer a better deal than what YouTube is offering. YouTube has Google. How are you going to rank on the searches? YouTube has Google. So you're not even going to show up. If Google deems that you are a threat, you're probably not even going to show up in the search. How do you even break in? So if you had the possibility of not losing any market share in the market that you're in for the next 20 years, simply because of the size that you are, what multiple are you truly worth? So no, I don't think the multiple is dead. I think it has to include, I think in the multiple, we have to think about a fundamental problem of economics, which says that money will not be attracted where there are excess profits because it simply can't. And economics says that excess profits cannot exist for any period of time before being competed away. Therein lies the power of that multiple, is those excess profits cannot be competed away by any small firm. And there's no one on the horizon, even some small company up and coming, that, hey, this can change everything. So, any tips for command words? Justify, explain. If you have the level 3 subscription, I talk about those pretty much every day now. Monday, there's another 3-hour session. Tuesday, there's a 3-hour. Wednesday, Thursday, and then Saturday. So 15 more hours of it. As far as keywords go, I'm talked out. I'm up to here with the keywords. Sitting for level 3, 15th of February. Wow, we're just around the corner. We're the 4th, 11 more days. Lean in. I lost the question feed. Let me see if I can make this any bigger. I think it's Control Plus, right? No, that did not work. All right, let me move. Let me move this closer to me. Look at that, I'm getting closer to you. All right, what do we got? If I buy CFA level 1 full access plus package, does the applied level additional feature continue? Yep. It doesn't continue until level 3. It just continues on. I should say it doesn't continue just to level 3. It has no expiration. So yeah, as you go through each of the levels, that never goes away. Like I just buy the middle package and still get the applied. No, you'd have to buy the CFA Plus package. You'll get the applied series at level 1. When you get to level 2, You don't have to buy the plus. You just oh, I see. I think that was your question. Would I then just buy at level 2 and level 3, the middle one on the screen? Yeah, you would. In fact, the system would disallow you if you had the applied series, the system would disallow you from buying the CFA plus because it would say you already have this subscription. It would disallow you. So you couldn't do it. You couldn't buy it by mistake anyways. I was interested to hear today's market update that you are selling calls against TLT. This is my second time selling calls. When it peaked over 100, I sold calls. When I saw it Thursday at 98, just breaching 98, I thought, I'm still not convinced that 100 is in play. So let me sell $100 calls. They didn't have a lot of premium, but I thought, well, okay, good enough. I was gonna wait for Friday. If it was a benign jobs report, maybe TLT pushed to 99, 99.50, 100, maybe sell them. But nah, it's here now. Let's go ahead and sell calls because I'm good either way. Didn't get a lot, like 60 cents, but it's just, it's better than getting nothing, right? And Friday it didn't help. TLT fell quite a bit, but still week over week it's up. But it was nice. It's nice to grab that extra little bit of premium each time, right? Having trouble with understanding quantitative methods. I think my foundation is not solid. How should I go about solidifying it? For quantitative methods, math is something you got to do. So it's just you're not going to read your way through math. It's something you actually have to work some problems. There just aren't a lot available in good enough form with CFAI. So what you can do if you are connected with the university in any way is go to the library and look for textbooks in stats, and these textbooks have chapters, and chapters have end of chapter questions. They don't have to be CFAI style questions for you to practice. They just have to be any kind of question because you're just trying to learn. You're trying to form the knowledge. So it's not necessary that they be these simple multiple choice where half the time you can get it just by guessing and these two answers don't look right, it must be this, but you haven't really worked the problem, right? So time is the only thing that has shown to have a direct correlation with success in learning, is putting in the time. With low volatile 2-year yield and Fed cut projections, I'm paranoid to sell any calls and miss an outsized rally. Yeah, it is a real possibility. You are selling the upside at that point. But I have a belief that by the expiration for February, because that's what I used, the expiration, I don't see anything changing. There's not a big enough catalyst. But stuff happens overnight. I could wake up one morning and all hell is broken loose. Futures are down 150 points. Treasury futures are up 2 full points, and TLT could be up $3. And well, I've given it up. But it's only my TLT position, not my bonds. You don't have to sell calls on 100% of your position. Just do a few so that you generate some premium. But if the market goes up, the rest of your position actually benefits. Unless you only have 100 shares, then it's rather hard. Finding it difficult on other prep providers, but fine on CFAI. Should I take a day or two to review it completely? I'm finding it difficult on other prep providers. I'm not sure what the it is that you're finding difficult, but fine on CFAI. Should I take a day or two to review it completely? Otherwise, I plan to do multiple mocks into the last 2-3 days. I'm not quite sure what the question is asking when you say I'm finding it difficult on other prep providers. I'm not sure what that means. But fine on CFAI. Well, if you're fine with the CFAI content, stick with that. A day or two to review is not a big deal. I mean, exams on the 20th, you say. You still got lots of time for mocks. Can you log into your IBKR software? Yeah, I did it just before I logged on. Let me just have a look here. Yeah, I'm in. I'm in. No, well, you can't see it. It just looks like a big screen. So we're futures. Nasdaq futures down 32. S&P futures down 8. Treasury futures on ZB down 0.44%, 1732. So fixed income still suffering. But yeah, I can log in. With my CFA level 3 exam in 10 days, how do you recommend to approach my review? It's not your first dance, man. I mean, this is your third party. You did level 1, you did level 2, you're at level 3, so you must have been successful at level 1 and level 2. Why would you change anything that made you successful? I would say do more of what made you successful. Do that. Whatever you did for 1 and 2, do that and lean into it. All right. Where can I get an hat? These are now off the market and collector's items. I don't think they're being sold anymore. So, and I don't think they're being made anymore. So the ones that are out there are the ones that are out there. And I think in total, we bought 1,000 of these. So there's only 1,000 out there. That's the end of it. There are no more. Which utility stocks are you most bullish on? The big ones. Go for the big ones. The ones that probably will have the highest asset growth. The southern ones I think are better because air conditioning runs longer. I know that in the winter, you rely more on gas in the northern hemisphere. So your gas bill goes up, your utility bill comes down. Air conditioning goes on your utility bill. So you go down to those southern states, it's running all the time. And if we do have average temperatures that are increasing over time, then those air conditioners will have to run longer. You're going to need a larger asset base to support that. So Duke, NextEra, between the two of them, they basically own Florida. But you don't have to pick. Just the XLU, which is the utilities index. Just take that. You don't have to pick a particular company. About VXX, considering increase in risk volatility, and now I'm down 50%. No one's afraid of anything right now. Problem with VXX is there is no non-arbitrage pricing of these things. So it's sentiment. You're making a bet on sentiment. You're down 50%. I don't know how much 50% is. I don't know how much 50% is left to go. If you are down 200 and there's 200 left to go to zero, I would say $200 is a cheap option to keep open. That if it does hit, well, okay, great. If it doesn't, well, you're looking at losing another 200. I don't know what 50% is. But even with last week's sell-off on Wednesday and the rallies we had into the week, volatility just was like, I don't see where it's going to come from. I certainly wouldn't be trying to go long volatility at this point. Long volatility is like saying, well, I'm going to short the market. I wouldn't short the market at this point because I don't see a catalyst. So I don't know that I would be taking a negatively correlated trade like long vol. Why do you not look closely at the rates of other major economies like UK, Japan, apart from the US? Because I know nothing about their economies. I don't play in their economies. The US is the largest economy out there. I understand the US economy. I understand a lot of the relationships, but UK and Japan, I don't know nothing. Look, I don't even follow Canadian rates. And up until November, I'd lived in Canada not my whole life because I lived in the US for about 4 years, but I'm Canadian, and I've never followed the Canadian rates. If you ask me where the Canadian market is, I have no idea. Is it at an all-time high? I got no clue. I have no clue. What's our GDP? I don't know. What's our inflation? I couldn't tell you with much precision. What's our unemployment rate? 5 something. Like, we have a jobs report this Friday. I'm uninterested. Which seems odd. I'm in Canada. You'd think that I'd know this, but you're going to be well knowledged in one market, but a generalist if you try to do 10, which means you're not going to be that good at any one market. So that's why. However, the process that I go through would be the same process that somebody else will go through. And if I'm not doing the UK and Japan, maybe you want to do the UK and Japan. Maybe you want to say, look, I'll take the same process and I'll do the UK and Japan, and you can put videos up. I have no problem. I mean, it's not like I'm going to say, hey, what are you doing on? Fill the gap. Fill the gap. I'm okay with that. Why aren't you tan? Costa Rica, bad weather. Costa Rica. I'm actually tan. It doesn't show, but I actually am. So it's the sun is hot. The sun is hot. I'll tell you that. I'm amazed. I can stand in the sun, and within a couple of minutes, I'm sweating. Meanwhile, the locals, I have 2 people working for me. They're working hard in the sun. They're not breaking a sweat. I'm looking at them going, what the hell is wrong? I help out a bit. Sometimes I'll grab a few things, or I'll grab a rake and I'll do a little bit of work because I get bored. I want to do something. And within minutes, I'm just dripping wet because the sun is hot. Because it's hot, you tend to stay in the shade more because shade is shade. There's no humidity. So when you walk into the shade, it's cooler right away. So I tend to hang out in the shade, and the house is built in such a way that the way the roof extends out in certain places, you have to purposely go out into the sun. So maybe that might explain why I'm not tan. I mean, if you look at my hand, you might say that's as white can be. I can see the veins, Also, I don't want skin cancer. A little bit of sun here and there is good, but to get dark brown just because I can, it's not my thing. Lay out in the sun, and it's not my thing. If the sun hits my skin while I happen to be moving around out there, well, then so be it. But that's that. Why do you classify your videos on ABR and agency under the financial sector if you're in your applied series? Aren't they more real estate? Mortgage REITs are in the financial sector. So they use their balance sheets are financial balance sheets, financial assets, financial liabilities. So yeah, I classify them in the financial sector. No, they wouldn't be in real estate. No, I think of mortgage REITs as financials. I don't think of them because they're not equity REITs. They don't really have equity. They don't really have real estate. They have a financial asset that is backed by real estate, but it's the financial asset that's the thing. So I don't know. Just that's where I put it. Any thoughts on the Barons Roundtable? They have extraordinary titles and knowledge, but seem to miss on their takes a lot. No, I don't have any take on that at all. What else do we have? Salt Solutions is giving level 1 for free. Do you see them taking some market share in the future? No. I almost think that if you're going to break into CFA now, being that it seems rather consolidated in 2 players. If you look at market share, which is us and Kaplan, we're the second second largest. Um, at level 3, I would almost say we're neck and neck at level 3 just because of the sheer number of our subscribers. Uh, it's going to be hard to get eyeballs for money. That you're going to have to give something away. You're going to have to give something away if you have a skill, if you have something that people want. I think at this point you're going to have to demonstrate it. Um, yeah, you're going to have to demonstrate it and give it away for free. Now, if you're giving something away for free, it's probably because you recognize that you couldn't sell it. And I think it's the purest form of growth is to give something away for free. It's the honest way to grow, I think, because if nobody wants it for free, then okay, there you go. There's your message. Nobody wants it for free. Nobody wants us. Why should we spend all this time building something that nobody wants? Let's just go away. But if people want it for free, not only just want it for free, but are willing to make the transition from free to paid, then you have something. Then you know that, well, okay, I passed the consumer test. I should invest more in my business. But if you can't pass that test, um, even giving it away free, if you can't get people to then give you money for something, then the free was free because it was free, but it wasn't really good. I mean, it didn't add value. So I think the cost of entry into this industry today is free. And if I were going to project out 5 years, I think the weight of competition is for lower prices, not higher. I think you would have to add significant value to go higher. But I think the weight would be for lower prices going forward, not higher. I mean, that's on education, especially with technology making inroads in education today. Prices of education, even higher education, have always just gone up. And even 10 years ago, I was saying there's no need for this with technology. There's no need for these prices to keep going up. Technology can widen your margin at the same price. What's this nonsense? As you have more and more platforms, like Udemy, like Coursera, like edX, like YouTube, which lots of talented people on YouTube. What you need to do on YouTube is break out of your feed, the feed that YouTube gives you. Break out of that. Start searching for new things that you never thought possible. You need to break out of that. It is so absolutely huge, YouTube. It's so absolutely huge. That levels the playing field for a lot of people who have a skill but don't have a venue. You're going to have to give it away for free. And I think education, longer term, the weight will be towards lower prices and more competition from probably sources we're not even aware of at this point in time. We think, well, university is the way to go. Is it? Going forward, is it the way to go? I don't know. Or are smaller academies, online academies, taught by practitioners with 20, 30 years experience, that teach a small, narrow field, like just finance or just accounting, that universities would then say, well, we can partner with this private company and we will recognize as credit at our university these courses this private academy teaches. I mean, choice always wins in the end. I think if you're looking for probably the most exciting place to be in the next 15 or 20 years, I think it's the online education space, because university is facing a crisis of existence. The 4-year degree, having been in the university system my whole life, I can tell you right now is a colossal waste of everybody's time. It's not necessary. 4 years it could be done in 2. It can be done in 2. This 4-year nonsense. We take somebody off the market for 4 years and saddle them with a lot of debt for 4 years when we fully know we can do it in 2. We know we can do it in 2 trimesters. 2 years of trimesters, where it is full time for 2 years, and get rid of all that nonsense filler courses. Why the hell does a finance major need an HR course? What a colossal and what a terrible thing to do to a human being to make him sit in an HR course. What a terrible, terrible thing to do. It's not needed. I know it's not needed. And I've been in the system my entire life. I know it's not needed. It's a waste of time. So, being that they're facing this crisis of existence, this existential, I'm reusing words, it's an existential crisis. They become too expensive, too administratively bloated, too concerned about the words you use on campus and not the thoughts you think about anymore, not the thoughts that you can debate, but you have to debate the thoughts our way. And there's only one way to see the thought. And if you don't think our way, you need to go. They become places of indoctrination into one way of thinking and one way of thinking only. I don't know if I can think, if I had to cripple an entire generation, if I had to cognitively cripple an entire generation, I don't know if I could do better than what universities are doing today. I don't know that I could do a better job than what they're doing today. So this is an industry that is ripe for disruption, is the education industry. Universities have had a stranglehold over credentialing for hundreds and hundreds of years. And with technology the way it is today, it's just not needed anymore. They are almost irrelevant. Truly, they are almost irrelevant. You have professors in business schools that have, in their entire lives, never once set foot in a business. You have finance professors at top schools who have never traded a single derivative in their life. And why would they? They're researchers. Wouldn't you rather learn from practitioners than academics who've never actually engaged with the market? But this is business school, right? And if you turned it over to the free market, there would be great academies for finance, for accounting, for engineering, for computer science, but there would be no academies for gender studies because the market doesn't want it. The market doesn't value it. And all we're doing is layering on debt on students, on this illusion that they're going to get something that the market values, and the market doesn't value that shit. Maybe it's great for a book club and a Sunday discussion, but it's not the basis of a 4-year degree. The market would quickly weed that out. That's an industry ripe for disruption. Why there isn't even more money flowing into that space right now with the Apple VR set, with Oculus, with all of the possibilities of me being able to be in it's $3,500. You buy a set and you can have a whole classroom in front of you. Why? It gives me goosebumps really to start thinking about the sheer potential in the education space that's just lying there. And you can compete against Coursera. It doesn't require scale. You can be the one individual that, hey, if you want philosophy, it's this guy. It's this guy, period. It's this guy. And if he can get universities to recognize his course as actual credit, there you go. You can get a university credit for $200 instead of $3,500 or $4,000. How much better can that be, right? I've gone on about that too long. I'm giving away all my ideas. What else have we got here? I see you do not invest in tech, given they constitute a large part of the index. Why don't you focus on MAGA? Well, I think you mean by MAGA. I think you mean something other than Make America Great Again. On tech, it's not that I don't. I used to quite a bit. 2002, 2003, 2004, and even now, I look at some tech companies and I think, I have some interest in them. For the most part, I don't understand a lot of the tech. I understand certain industries. Like real estate did very well after 2010. It outperformed every sector in over 10 years. It outperformed every sector. So when you're winning in a winning sector, you almost feel no reason to move somewhere else. It outperformed tech for those 10 years. It outperformed every sector. It was the best performing sector. Well, now we're in a transition. It's not going to be that outperformer. Going forward, tech will, and large cap tech will be the outperformer. I think we all know that. This gives me an opportunity to answer another question. Somebody had asked on the other video if I still plan on doing the financial modeling in the applied series, because that was going to happen in August of this year. Yeah, I am. I was going to do DR Horton because you want to do a simple company, right? But then I think, but why do a simple company? Why not do a hard company? Why not do a complex company? Because then you cover everything. And with Apple and Netflix and Google doing what they're doing, why not do them? So I thought, I've been negative on Tesla's valuation for quite some time. And as far as the fundamentals, I've been right on the fundamentals. I've been right on the deteriorating margins. I've been right on the deteriorating growth rate. I've been right on all that. But I misjudged the market's absolute willingness to just ignore it all, to just continually think, no, that's today, the future's better, to just continually ignore it. Why not do Tesla? Why not put it to the test? Why not teach, do some, not teach, but do some financial modeling, show you how you would set up a financial model, where you put your assumptions, and then how you would go through all the decisions. How do we determine the level of sales? What tools do we use? How do we think about the cost of capital? Would we use, and this is where I disagree with somebody else, somebody else popular, I won't say the name, but who did an evaluation of Tesla and used the same cost of capital in all of their lines of business. Would you do that? Would you use a corporate cost of capital for what would otherwise be called a venture capital project within the company? Remember, in corporate finance, we learned that you would use a project cost of capital for a project within a company that is not part of what the company really does. So for Tesla, looking at self-driving and looking at the robot, would you really forecast and discount cash flows at the company's current weighted average cost of capital, or would that be a valuation or a venture capital type weighted average cost? These are the decisions we would make. Tesla might be a fun one to do. If we do it and we do it from a bottom-up perspective, let's just see what happens. So maybe that'll be a fun one to do. From where we sit, it sounds like a fun one to do. But by the time we get to August, there may be another stock that has a better story that you think, well, this is the hot one now. Let's do that. So it's not that I'm against tech. It's just I had my pot of gold for how long? Why would I look somewhere else? I had a great pot of gold. The volatility was at the level where you could sell options without constantly having it called away from you or put to you. Tech is too volatile to enhance your earnings with options. It's just too volatile. So I had a winning strategy. It's not going to be a winning strategy going forward. I know that. Other than Canadian apartment REITs, I got out of REITs like almost a year ago. I got out of REITs because it was like, I don't see where my upside is coming from here. It's been played out. What are some ways you utilize Fred? There's so much data on there, and I'm curious how you incorporate into your investment decisions. Would you make an applied series video on this topic? Yeah, Fred's got a lot, but here to use an old expression, if you don't know where you're going, any road will take you there. If you're going to Fred just to play around, almost anything, If you say, well, what do I do? Well, I don't know. What do you want to do? What do you want to get done? What's your research question, right? Um, it's full of answers, but you have to have a question. So you must have something in your mind saying, I wonder what the relationship of these two economic variables are. Fred's a great place to answer that question, or to help you think about how you would answer that question, or at the very least, it will have the data in which you can then use to answer that question. You'll just have to determine, well, what form do I want the data in? Do I want this in its natural form? Do I want the natural log of this? Do I want to convert the data somehow? Am I doing a relation? Am I dividing one data series by another? Is one data series quarterly, the other one monthly? That's going to be a bit of a problem, right? So when I was doing my PhD, one of the things that was impressed upon you is do not go to a data set without your research questions in your mind. Don't do it, because you're going to just start fiddling around, pushing things around and say, hey, look what I found, right? And you'll think you found something, and it'll just be spurious, because in a data set, 5% of everything you do will be significant. That doesn't mean it's significant. It just falls within the 95% parameters. Have a research question in mind, and then you go to your data sets. It's the honest way to do work. Have the research question first. What data do I need to test if I'm right or wrong, or if there's something here? Then check out, see if Fred has it, right? Were you ever interested in starting your own investment company? No. If you hadn't become an educator, where do you think you would be right now? Well, that's a good question. Where the hell would I be right now? No, never thought of having my own fund. Thought briefly about it for, I think, a couple of weeks, and then quickly dismissed it. Having your own fund requires a whole bunch of skill sets I simply don't have. Heavy administration. That's not my thing. Heavy administration. I don't mind the asset management and picking and doing that kind of stuff, but you may think that that's the biggest part of the business, but it's not. It's the administrative stuff, and it's the sales. It's getting money in, and negotiating the rates, and the big money is gone. The unless you're a superstar, the big money in asset management is gone. You will get beaten up on your basis points. You'll get beaten up a lot, and you're going to need a certain size just to cover your costs, just to cover your platform fees, your data feeds, your research, your reporting, your compliance. Like, think about the nightmare that is right there. That's a whole business. Where I would be interested in asset management if somebody came to me and said, I've already got that. We've got all of that. All you have to do is move into this room and start thinking about ideas. Oh, okay. I don't mind doing that. That sounds like a lot of fun. I would do that. In fact, I think what the funnest part would be is to recommend ideas on a percentage of gain. That if a fund said, give me an idea, and I came up with an idea, and if it hit over a certain threshold, so if my idea beat the market, my one little pick did better than the market, then I would get some points on the upside. I'd be all in for that. But I don't want to be involved in the management of a fund, in the sales part of a fund, in the compliance, I don't want to be involved in any of that crap whatsoever. None of it. So there would be my conditions under which I would say I would work for a fund, but I wouldn't work for just one. I'd want to be freelance, which, all you really are at that point is saying, oh, so you just want to publish research? Not really. I don't want to write, so being that I have these requirements of only what I would want to do, it's very rare that somebody would say, hey, we're looking for just that thing. All right. Do you think we could be in for hyperinflation or deflation? If I had to pick, deflation. I mean, if you're giving me two options, hyperinflation or deflation, I'll pick deflation. That does not mean I think we're going to get deflation. It's just if you're giving me two options, I'll pick deflation over hyperinflation. Thoughts on buying real assets like land? So real estate is a tricky thing. It is a tricky thing because it has a holding cost. It's not free to hold real estate. And it is location, location, location. It's not just like anything. It's not like a $20 bill is a $20 bill. An acre of land is not an acre of land. So it's location. You gotta know where to buy. And in real estate, you make your money when you buy. If you buy wrong, you'll never make money. You gotta make it when you buy it, and then it's just a matter of when do you want to sell it, right? So no, I don't know that land is going to be the thing. That does not mean it's not a thing. I just don't know if it's going to be the thing. Is there something better that you can do other than land, right? How do you measure if equity return is high enough for justification over safer fixed income securities? Well, level 2 is full of that. Level 2 equity analysis is full of that. That is what you learn at level 2. Not deeply, you're not going to be an expert, but that's the purpose of level 2. It's a valuation level. So we value fixed income, you value derivatives, you value equity, you value alternative investments, and you're introduced to different models of valuation, whether it be relative valuation, whether it be free cash flow. What are some of the other ones? Residual income. There are many different dividend discount, lots of different models for valuation. And then you do your valuation, and then you determine whether or not you're getting paid enough to take on the incremental risk over a risk-free security like a treasury. That's your job. And you learn how to do that. And that's what CFAI has for you at level 2. Current events aren't enough to cause a recession. Yeah, I kind of agree with that. Why do you think the VIX is so low with rates where they are? Geopolitical risk, relatively high valuations, commercial real estate. Because when you see, and this is just a theory, when you see the market just keep going up, just defying logic and saying, well, here we go. When you see the economy stronger than rates would imply, after a while you say, what do I need protection for? Protection from what? The economy is great. What do I need to be buying these puts for? And when you're not doing that, implied volatility drops, and there we are, right? Can you please explain why effective interest rates increase for a discount bond with prepayments? The effective interest rate, I think you have a misunderstanding somewhere, because it's coming through in your question. Decreases for a premium bond, the effective interest rate. Well, the effective interest rate is not going to change. It's not going to change. I don't know in what capacity you mean the effective interest rate. So let's say that I'm a company and I issue a bond at a discount, and I have these bonds on my balance sheet, and I opt not to use fair value, that I'm recording the bonds and I'm amortizing them to par using the effective interest rate method. Each year, my effective interest rate is exactly the same. It doesn't change. It simply doesn't change. So you must mean the yield on the bond. Well, the yield changes if rates change, or other yields change, and the yield on the bond will change, or the credit spread changes. But if rates got locked into place, the passage of time would not change the yield to maturity. So I'm confused by the question. I think I see that you are confused about something, and you think that this is a question, but the question itself just shows the confusion. Unless I'm missing something really obvious, it's not making any sense to me. Failed level 1 November, sitting for May. My weakest topics were quantitative methods. CI, I'm not sure what CI is. I'm confused on how to change my strategy from watching videos, then read the material on areas that were confusing and do MCQs. It's not enough information for me to be able to give some advice on that. So when you say watch the videos, you see, I would have a bunch of follow-up questions. What do you mean? So if somebody says, I go to the gym every day, but I'm not gaining any strength, I would say, well, what do you do? Going to the gym is one part. It's what you do when you're at the gym. So if you go to the gym and you hang out leaning on machines, chatting up people, well, then yeah, of course you're not going to see any progress. Just simply walking in is not going to do anything. Turning the video on and your mind wandering while the video is playing, yeah, it's not going to do anything. Reading and your eyes passing over all the words. I mean, I've done that where your eyes pass over all the words, but you can't remember a thing that you read. Yeah, that's not going to do anything. So it's not the what that you're doing, it's the how you're doing the what that you're doing that would give me some clue as to, what it could possibly be. So I don't know what to say on that one. How long can the government keep borrowing without consequences? Ask Japan. Japan has probably got the highest level of debt to GDP. I'd almost hazard a guess in the last 500 years. I don't know my history well enough going back into the 15th and 16th century, but it is massive debt. How much, if a country, like take the US, reserve currency, if you're going to look for innovation, you're probably going to find it in the US more than any other country, simply because of the level of entrepreneurship and the amount of venture capital that simply exists in the US, and the very real possibility of owning your upside. That the US still is the market for innovation. You have the strongest military in the world, and I know that's debatable, but as far as technological advancement, I don't know that you're going to beat the US Army. That does isolate the country from the whims of the globe. That it could probably continue to borrow for quite some time before the market said, well, we have a problem with you. Not until you actually had decline, like Canada is experiencing now. So Canada has GDP per capita actually dropping over the last 3 years, which is the wrong direction. It's the wrong direction to go in. Canada's always had a productivity issue. So when you combine dropping GDP per capita with low to almost non-existent productivity, that is an economy in decline. There would be a limit. So I would say that the globe would be more likely to hold Canada's feet to the fire in terms of the amount of debt sooner than they would hold the US's feet to the fire, even though the US's debt is a higher proportion of GDP. Right? So it's not just the debt to GDP. It's a constellation of things that you have to put together. So, yeah, I mean, that's the way that I would sort of break that down. Okay, I lost the question feed here. Let me go back. There we are. I had a suggestion for your site, being able to view flagged QBank questions by topic. Reached out to the support email, but don't know if the message got passed on. I thought we had that. I thought that you could flag certain questions and then review them later. I don't know. Since I've sold, I've sort of just backed away from a lot of the more administrative stuff. I thought we had that. Thoughts on timberland investing or timberland REITs like Weyerhaeuser? I haven't followed the timberland REITs for quite some time. I don't know that they're going to have a really good time until housing really booms. So you would have to have a building frenzy in both Canada and the US, and that requires timber. And I think they would do very well at that point. I don't know that yeah, I just don't know that now is the right environment for it. But the nice thing about timber REITs is if you don't sell anything, trees grow by about 5% a year. So there are different types of trees based on their diameter, right? Some are pulp trees and you cut them down and they're going to be nothing but pulp and paper. They have to get to a certain dimension to be timber trees. And when they do, their price actually, it's actually more beneficial for the REIT per kilogram of whatever they harvest. There is a bump up in price that is significant, but it takes years to get to that point. So you could have some stands of trees that would be classified as, well, they're pulp trees right now. But if you don't harvest them over the next 3 years because the demand isn't there, they will grow at 5% a year, which is like a dividend, right? It's like a 5% dividend each year. Your inventory just gets bigger. And then when you do harvest them, you're harvesting them as timber trees, which is incrementally, it's not just the 5% compounded for 3 years growth. The price is significantly more. It's just a jump up in price. So they're nice in the sense that they're not farmland. So if you own a farm and you have acres and acres of corn, you don't like corn prices, too bad. Too bad. You got to harvest your corn. Too bad. If you don't like timber prices, just leave them. Your trees will be 5% bigger next year, which means your revenue will reflect the fact that your trees are 5% bigger. You don't lose it. It just stays in the field. It just stays in the tree stand. So they're nice in that respect. But I don't know that they'd be much on fire until you had, I shouldn't say they'd be on fire, that they'd be hot or in favor unless you had a reason for very large demand. With more and more newspapers simply going away, pulp trees are, on one side, that side of the business isn't as exciting as it used to be. Less print advertising, more digital, less need for that kind of stuff. And then you have a housing market where you're not really building all the units you'd like to build. You have inventory building. What do you think about Japanese yen? Opposite monetary policy between Fed and Bank of Japan, where U.S. cutting rates and BOJ hiking rates. Very compelling to make a long yen trade. I think the long yen trade has been telegraphed for a couple of years now. Japan's level of debt, I think, really disallows any aggressive interest rate hiking. Japan's shrinking population is deflationary. So you have a little bit of inflation now and some thinking that they're going to have to move at some point. Maybe they don't. Maybe they don't have to move, and maybe they can't move at this point. So the yen long trade has been talked about. It's a couple of years now. I don't know. No, I don't know that I would put a lot on that one. um, I'd be more likely to think about Japanese equities in yen. And if you do get a yen rally, then great, you're getting two sources of return. You're getting, excuse me, you're getting the stock return and you're getting the yen return. I don't know that I would just do just a yen trade, but a yen equity position. Sure. Do you think now's a good time to buy the China equities? No, I do not. I think now is a time for caution there. It had its run. It is in Western terms not a friendly nation. India is a friendlier nation. Mexico is a friendlier nation. And it's a political point, right? So it's no, I don't think it's the time to invest in China equities. 20 years ago was the time. Much like now is probably the time for Indian equities. Yes, they are priced. Yes, they are priced. But I think the next 10 years belongs to them. So no, I don't know that I would be looking at Chinese equities. I think they're going to be. I think you could easily see a repeat of Japan from 1990 onwards, where the Nikkei index lost 90% of its value. So I think you could see that in China. The globe just moved on to other things. Am I correct saying central banks increase money supply by lending to commercial banks through purchase and resale agreements? Not really. I mean, you can. That's called temporary. It's a temporary way to put money into the system. So engaging in a repo where you're going to say to a bank, here's some money, give me your securities. You're actually putting money into the banking system. You're increasing reserves at that point. But these are term repos, so it's temporary. If the Fed really wants to, or any central bank wants to increase the level of money in the banking system, buying securities directly from the Treasury is a way to do it, because the money that's in the banking system can't buy it. So if they can't buy it, then it has to look for something else. So you are pushing more money or leaving more money in the banking system. So repos are a very short-term way to get something done. It's a great way to relieve stress on the system. If you need to temporarily inject liquidity for some period of time, use repos. But no, I don't know that is a good long-term solution. Decrease money supply by borrowing. Okay. Could you please tell me the compulsory requirement of CFA exam registration to buy packages on your website will change? Could you please tell me if the compulsory requirement of CFA exam registration to buy packages on your website will change? No, it will not. It's difficult to to decide the exam window sometimes. Yeah, I understand that. I do understand that. It's not as flexible as it could be. But we have to balance flexibility with security. That's what we have to do, because we have content that if it gets out, it's like a virus. Everyone has it. Everyone has it. Nobody wants to pay for it. And if nobody wants to pay for it, it doesn't justify the cost of producing, and then it just goes away and then nobody gets anything. Right? That's the problem with this sharing mindset that is cultural, is you end up destroying the very company's product that you like so much. If you're not going to support the company's not there just to support you. Who the hell are you? That somebody, a group of people, should make stuff and give it away to you for free, unless they want to. And if they're giving it to you for free, then your profile and your data movements belong to them, because somebody's got to pay for it somewhere, right? So we did have to balance security with access. If you're not a CFA candidate, there is no reason why you need to be on our site. It is of no value to you unless you're a CFA candidate or unless you're a reseller. Right now, I know resellers will find ways around it, but we keep finding ways to shut them down, and our DRM is getting better and better, and it will be at some point absolutely tamper proof. We learn every day, and you have to if you're producing content. You got bills to pay. Period. You got to pay Amazon. You got to pay Microsoft. You got to pay Real Player. You got to pay all these people. They want to be paid. You got to pay staff. The pesky staff want to be paid. Whether you get paid or not, they want to be paid. It's ridiculous the way these kids think these days. I show up for work, you pay me. It's like back in my day, right? So you got to pay for all this stuff. You can't. As soon as a reseller shows up, as soon as it shows up once outside the site, it's like a virus. It spreads. The first person to buy it says, well, I'm going to recover my cost by selling it myself. And then the next person who buys it says, I'm going to recover my cost by selling it myself. And pretty soon everybody's selling it and nobody's paying you and you're done. And then nobody has anything. So no, it's not going to change. If that means a loss of a few customers because of a loss of flexibility, in the long run, it is the cheaper alternative. So if you start producing content and selling it, you'll know exactly what I mean. You'll know exactly what I'm saying. You'll feel the exact same thing. When somebody takes your stuff and starts selling it like it's their own and taking the money and putting it in their pocket and not giving you anything, you'll know exactly how that feels. So, yeah. I'm confused with the rates used. I don't understand why the name of the rates used in repurchase agreements is the overnight rate and not the repo rate. The repo rate, there's not one repo rate, right? There is a 1-day repo, 2-day, 3-day, 5-day, 7-day, 1 month, 3 month, up to a year. So when we say the repo rate, that's the rate in the contract for whatever term repo that you have. The overnight rate is an overnight rate, period. That's an easy way to explain that one. We would also love to know your views on D.R. Horton. Well, I still think the U.S. housing sector has a long way to go. As soon as interest rates start coming down, I think the market gets interesting. I think mortgage rates between 4.5% and 5.5% look really interesting. Not low enough to encourage a lot of prepayments on existing houses, but low enough to bring new buyers into the market. So I don't think a lot of existing homes would hit the market, because I think mortgage rates would have to come down significantly more than the 4.5 to 5.5. So it would be, a builder's paradise in that respect, that you'd probably have good traffic flow at reasonable mortgage rates. Once they get too low, then you're going to get this wave of pent-up demand from existing mortgage holders who have low rates. You'll probably get a huge influx of supply at that time. It might take a year to work its way through the system, but you would still be left with a housing supply shortage. Worse in Canada. I wish there was some way to capitalize on that in Canada, but there isn't. It is worse in Canada. So I think it continues to pay. Now, is it going to continue to perform like it did the last year and a half? Is it going to double in price again? I don't think so. I think it'll give in line or slightly above the line return in terms of the S&P, but it certainly I don't think is going to be the big winner it was for the last year and a half. But I still think it has upward mobility to it. Okay. What do you think about materials in this quarter? Well, that's a tough one, right? I mean, because you're asking me two questions here. You're asking me, what do I think about this? And what do I think about this in this time? That's a hard thing to do. I mean, you can think of an asset that you like, or you can think of a time period over which you like something. But to think of an asset you like in a time period and what's going to be the performance in that time period is brutally difficult to do, other than just a wild guess. In this quarter, I have no idea. Not a clue. Long term, you're going to have infrastructure building continuing in the US. You're going to have to. You're going to have infrastructure building in India on a scale that probably would have rivaled China. You're going to have infrastructure building in Mexico. So materials, I think over the next 10 years, yeah. Over the next quarter, I don't know. Beats me. No idea. But long term, yeah. What are certain signals, data I can track to see if the Fed will start to significantly cut rates and thus create an environment that is shot? Well, there is probably what the Fed says and levels of inflation. Now, level inflation coming down to 2% with a strong economy, well, then great. They've got check mark under both mandates. Why would they do anything? Check mark and check mark. For them to do something, you need an X in one of the boxes. Either growth starts to fall off and they cut to support that, or inflation overshoots to the downside. You see a drop to 2.1, 1.9, 1.7, 1.1, 0.9, 0.7. Yeah. Once you start getting much below 1%, it'll be, we should, start to cut now because we know it works with a lag, right? So we can't cut rates based on what we see. We have to cut rates based on what we expect. Starts with a lag. I would seem to think they'll have more clarity on balance sheet on when to stop QT than when we're going to get the first rate cut. But I think you'd probably get a rate cut by, well, you're certainly going to have something before the end of the third quarter. Maybe one in June, but March, I don't think March is realistic at all. I don't think that that's a realistic thing. But for the Fed, it will be that one of their mandates are in trouble. That's all. What are your thoughts on the idea of U.S. Treasury crowding out private security borrowers given the high deficits? Or should I be focusing on bank reserves? Is it true that it would crowd out private investments? I have a hard time seeing that. I've heard the crowding out story before, and it never has. I mean, it hasn't. If we look at issuance of corporate bonds over the last year, over 2023, they were above 2022, even with large treasury issuance. Corporate bond issuance in the U.S. was more in 2023 than 2022 at yields that the market said there's no problem here. So at good yields. Yeah. I don't know that I would put much on the crowding out argument. Theoretically, it's an argument. Theoretically, there's a crowding out argument. But you have a money supply that grows at about 6% a year. So no, I don't know that I would put a lot of stock in the crowding out argument. During your educational years and in your years as a professor, did you notice a decline in the quality of students and care in the classroom, or has this always been around? Okay, so yeah, that is a good question. A decline in the quality of the student. Yeah, but it's hard to tell whether that was a function of an increasing foreign student population that didn't have English as a first language. So that by the time you read their assignments in English, it wasn't great, but it could be that in their own language it would have been great, but converted to English, much was lost. So it was because over the years there has been a significant increase in the demographics of the classroom in terms of domestic and international students. More and more of your class became international. So I can speak to the rigor of the classroom. Not really. When you look at your course outline over the years, not really. However, the willingness to give out lower grades disappeared. Um, so that's at certain levels, like at a master's level, almost everybody gets an A. It's like it would be difficult to give out a C, even if it's deserved. It's difficult to give out a C. So grade inflation is very real. That's very real over, like, say, a 30-year period. That's very real. I don't know if the rigor has decreased, holding the school constant now. Holding the school constant, so the same school, the same course, the same professor year after year after year. I don't think the rigor has decreased. The quality of the student is hard to tear apart, again, because you have a whole bunch of things that have happened over the last 30 years that have placed individuals in classrooms that may not have been in those classrooms. Can I just leave it at that? That you'd have to pull that out first to figure out, has there been a deterioration in the student? You'd have to hold a lot of things constant. I don't know that you can pull that apart. And if you attempted to pull that apart, you probably would never get that published. Not with left-leaning universities. You'd never get that published. It would be a non-starter. You'd never get it financed. You'd never get it published, and you may even lose your job. So some truths can't be spoken. That's the problem with universities today. Is I was at the tail end of that. Not the tail end. When I left, it was just creeping in. Like, it was just creeping in when I left. You had some policies that, you pushed back on that. You said, but all you're doing is giving students permission here. So the idea of, if you're sick for an exam, you don't need a doctor's note. Why would we compound your sickness with this? We need to be more compassionate. You're sick. We're not going to say we don't believe you. We believe you. Well, 25% of your class was sick for the final exam. So one of two things was going on. They were all just using the system, period, and they weren't sick, or this is a really fragile generation if 25% of people are sick at any given time. Must be a really fragile generation. One of these two things, right? And it wasn't a fragile generation. It's just, if you open the door, you give people permission. The other thing that was creeping in at the end is, don't fail anybody, because you don't know what adversities they're facing. That they are doing the best that they can. Find some other dimension to grade them on. But you're only giving people permission. If they know they can't fail, they're all going to have hard luck stories, and they're all going to be sick for the fun. You're just opening the door. So that was just creeping in as I was leaving. but it wasn't, nobody was really discussing how terrible things had gotten. It was just creeping in. Would I go back to a university now? Absolutely not. Absolutely not. Not only that, I'd never get hired at a university. Not today. Look at me. Right? What are certain signals, data I can, okay, I already did that. What are your thoughts on that? There, okay. In assessing TLT's profitability, well, it doesn't have profitability, right? It doesn't have earnings against economic indicators like core PCE, retail sales, FOMC statements. Do you think there would be global deflationary risk to cause rates to be lower? Yeah, I do. I think, number one, I believe technology is deflationary, period, full stop. And technology is finding its way into our lives more and more and more and more. Full stop. So, yes, technology is deflationary. It's finding its way into our lives more and more. It is deflationary. That's the backdrop. So, yes, I do believe that we have a deflationary backdrop in the world. But TLT doesn't have profitability, right? TLT generates a return based on its holdings, which are nothing more than treasury securities. Could you explain why net imports mean net foreign borrowing and net exports mean net foreign lending? Oh, it's really simple. So in level one, let me move this a little closer here because I do want to lean back and I don't want to be too far away from the microphone. In level one, in economics, what did we learn about national output? We learned an identity. Aggregate output equals aggregate income, right? So if an economy, let's say an economy produces $100 worth of goods and services, that means there should be $100 worth of income. But let's say you want to spend $110 worth of income. Where are you going to get the 10 from? Since you're spending 110, there's no savings in your economy because you have to spend less than 100 to generate savings. There's no savings in your economy. So this is how it would work. You take out your credit card, you buy something. Well, if you're going to buy $110 worth of goods and your economy produced 100, you're going to have imported something to be able to sell because there'll be nothing to sell. You swipe your credit card. The bank says, okay, we'll pay that. Damn it. We have no deposits because we have no savings. I know what we'll do. We'll issue some bonds. So they issue bonds, but nobody in the domestic market can buy the bonds. So an international investor says, we got all this extra money over here because we sold you a whole bunch of our stuff. So we got all these extra savings. We'll buy some of those bonds. So it's not one for one. It's by the time it works its way throughout the system, any debt, any spending an economy has greater than its production has to be financed from outside the economy. That's just the way it's going to settle out. And that's why foreigners are financing a company's trade deficit, not directly, but indirectly, because if you're spending more than you make, you clearly don't have the savings to borrow from yourself. You must borrow from someone else. Now I got to move this back. Taking U.S. consumers purchasing goods from Japan. I also didn't understand why a U.S. consumer ordering Japanese goods means the U.S. dollar ends up in the hands of foreigners since they pay in yen. Well, when the bank issues a bond to be able to finance your credit card purchases, they're going to issue a bond in U.S. dollars. So some foreigner somewhere is going to be holding a U.S. dollar bond. It just has to be, right? Can you quantify the change in valuation of a 20-year mature date zero coupon bond in the future at time T if rates go from, say, 5.25 to 4? So 100%. So if they're at 5.25, you can do that. Take the first derivative of Macaulay duration, zero coupon bond. You have a Macaulay duration of 20. First derivative, if you're at 5.25, we'll give you a modified duration basically of 19. So 100 basis point move will be a 19% change in price. Level one, CFA. Look how quickly I did that. That's the power of it. So if you have not considered the CFA career. That's what it can do for you. Take it, right? So yeah, that was fairly straightforward. I want to ask about L3 exam structure. Is it possible to have derivatives, AI, equity, fixed income as an essay? There are no essay questions. Okay, there are no essay questions. Get that out of your head. There's structured response. Structured response. That's not an essay. That does not mean you write paragraphs and sentences. Structured response. They're very specific types of answers. That's it. Okay, so stop saying essay. You're going to mess yourself up. Or essay only for PM. No, you have in exam 1, vignette, structured response, vignette, structured response, vignette, structured response. When you go back for the second exam, vignette, well, no, if you start with it'd be structured response, vignette, structured response, vignette. So they're interleaved. So you have them in both sessions. You mentioned you were cleared to trade January 18th with valuations where they are. How are you thinking about deploying capital in the market, which seems hot? There's always an opportunity. You just have to figure out what if you conceive of returns as a distribution and not a point. So if you think, will the market go up 10%? No, don't think about the market going up 10%. Think about the distribution of the returns. And when you think about the distribution of the returns, think about the parts of the distribution you don't think are likely to happen, and think about the parts of the distribution that are likely to happen, and you can just get access to that part of the distribution that you want. So there's always a play in anything. Give me one stock and only one stock with liquid options, and I'll generate return. I'll first have to figure out what are the likely outcomes for that stock, what are the likely distributions, and then I can play the distribution. So there's always an opportunity. If you don't like valuations, there's always other places to go. So GM sucks. However, GM did buy back 25% of its stock. It would have had a big pop on earnings simply because of its share buyback, and it did. When GM announced the share buyback, I said this is probably a $38, $39 stock on just the buyback, assuming no fundamentals change. So GM is a great stock to be selling $36, $35 puts on. If it has any kind of pullback, $36, $35. That does not mean it's a good stock. That does not mean it's going to double. That does not mean it has great upside. It just, you're playing one part of the distribution. And without any kind of return on GM, if the executive team wants their payout, they got to push that stock price higher, which means you're probably getting another round of share buybacks at some point because the story's not there. I think they need a new CEO. I was critical of her 2 years ago when she refused to spin out Cruise, when the spin out value of Cruise would have been more than what GM was worth, when self-driving and robo-taxis was the hottest flavor of the day. She should have spun it out on an IPO, but decided, no, we're going to keep it for ourselves so that we have some proprietary data for our self-driving vehicles. There will be no better self-driving vehicle or worse. There will be nothing better. If there's a better self-driving vehicle, here's what's going to happen. The government's going to step in and say, you got to share that with everyone. You don't get to keep that. If you're that much better, we can see that your vehicle is that much better at autonomy, everyone has to have it. It's got to be a standard. No company will get to keep its proprietary advantage if it's that good, which was a stupid thing to not spin it out, but she decided. And what are they doing now? They're defunding it. They pulled back their funding on it, which is why their free cash flow is so high. That's a fundamental problem, right? So what does she have to do to get her bonuses? Because every CEO gets a pay and bonus, and the bonus is tied to stock price performance. She's got to have that stock perform because for 2 years it didn't. So, knowing that motivation, selling $36 puts is low risk. So, to get to your question, being that we're in a market that's overvalued, there's always opportunity. There's always opportunity somewhere, even on stuff you don't want. There's always opportunity somewhere. So Oxy is another one. Sell those $55 puts every time Oxy drops. Sell those $55 puts. I do. I'm comfortable with that one. So yeah, I'm not really looking for the big market play. There's lots of tiny little plays in there, lots. In your video on semiconductors, you mentioned 90% of neon supply coming from Ukraine. Any thoughts on how the supply chain has adapted? From what I've read, steel plants can be retrofitted. I don't know. I didn't I didn't follow too much on that, but the analysis I did was more of a really great head start if you're going to be looking at the semiconductor industry. It's really not my industry, but it's a really good head start on looking into it. And then now this, now you would then go a little bit further and say, well, okay, has the supply chain adapted? Is that still true? I give you tools, you take those tools, and then you produce on your own, right? What do you think of NVIDIA, the sustainability of their margin and profits? Hyperscale, it seems all the money is flowing to NVIDIA invariably. Yeah, they do have that spot in the market that in 10 years people will look back and say, you remember the good old days when we were the only one? It will be competed away. It will be. Other companies will move into that space. Other fabs or other design firms will move in that space. So for NVIDIA, it's a matter of leaning in now and harvesting as much as they possibly can, and probably trying to push the innovation cycle faster and to a point where they feel their competitors simply can't keep up. That is how Apple broke RIM. But we call BlackBerry now. It wasn't hard to break BlackBerry. BlackBerry had a 2-year to 3-year product cycle. Apple had a 9-month product cycle. It was inevitable. So, it's the product cycle. And if they're piling CapEx into that, if they can keep that product cycle alive, I think they could do okay for a while. But the other side of it is, how long is that market going to be in place? At some point, you're going to have enough processing capacity out there for everybody, right? At some point, you're going to. And if generative AI doesn't start returning the promise it was intended to return, then all of that extra capacity will end up as just extra capacity. So NVIDIA's success, if you want it to keep going, relies on two things: a product cycle that is at a speed that competitors are finding it difficult to keep up with, if they can keep up at all, and the end market demand for more and more GPUs, because generative AI is this exploding thing. It is working, and it's this exploding thing, and everybody wants more and more and more. If those two things are in play, then yeah. But you get any crack in the generative AI story, or you get any slowdown in the product cycle, or AMD can match, or Intel can match the products. I don't even know if Intel is even in that space, but if AMD can match the product cycle, and even better the product cycle, then yeah, you have some problems there, right? Jerome said he sees first cut mid this year, so May, June meeting. Do you think the January 350K jobs day is overstated? Yes, I do. Yes, I do. And it's just a matter of seeing what the revisions are. Well, let's have a look at where the futures are right now. ZB. No, I don't know if it was because of Powell. ZB is slowly coming back. Yeah, it's slowly coming back. Futures. ES. Ooh, ES took a dump. Yeah, it was down 3, now down 12. NASDAQ futures down 48.50. Forex, how are we doing there? Yen's back at 148, almost a full round trip. It got to the low 140s, back to 148. I haven't looked at it in a while. And the CAD's still sitting under 135. I don't know what to expect there. Yeah, but not much of a reaction. Do you see opportunities in China anytime in the near future? No, I think I've answered that one. I think that if I had to take China or India, I'd certainly be taking India. India is expensive. China's cheap, but China's cheap for a reason, right? Is there a method for forecasting real estate prices in a specific location or region? If so, can you make an applied series video demonstrating them? If you're looking at real estate, like commercial real estate, it's it's income. It's the net operating income and the income that the property can generate. Um, but there are methods for forecasting real estate. But once you start getting to specific locations or regions, I'm unaware of the regional differences. But it's like anything. If you have a growing population uh, and a diversified economy, real estate should do fairly well. Where real estate doesn't do well is where you have a very concentrated industry in certain places and a shrinking population. Uh, it won't do well. So that's pretty standard. That's pretty standard everywhere. What is the system you use to do your weekly market outlooks? I use a Cintiq, a 13D as my tablet. I use Sketchbook, which I think it 25-30 bucks off of the App Store. I use Telestream ScreenFlow, which I think is like 200 or 300 bucks. I use a Blue Snowball. I don't use the Blue Yeti because it's too sensitive. The Snowball doesn't pick up vibrations. And then I use Final Cut Pro because it does do a good job of shrinking the file size so that the optimization on YouTube is faster. And that's it. But I mean, I can tell you all the technology, but unless you have, it's not the technology I use, it's what's here. It's the years and years of knowledge that make it what it is. I think it's well received, but it's that. It's if you don't have all the years of knowledge, if you don't have this, even if you best me on the technology, right? It's the same with teaching. Is that you can have fantastic technology, but if you don't have good teachers, then you've got nothing, right? Is there a method of okay? I already did that. I already did that. Attempting level 2 for a couple of years. Oof, third time. Any additional ideas for how to tackle it? Well, whatever you're doing is not working, and I don't know what you're doing. So I would say that you need some guidance, or you need to talk to somebody. But it's not working for you, and it's not like it's so difficult that you can't get it done. You should be able to get it done, but whatever you're doing is not working, and I don't know what you're doing that's working. Is Trudeau the worst PM of your lifetime? Yeah, I would say so. Yeah, I would say so, almost hands down. It's not that he's the worst prime minister. If it just stopped there, you could say, well, it could be just circumstance can create a bad prime minister. Circumstances beyond their control. It's that he is generally unintellectual. He's certainly not his father. His father was highly educated. He is not at all. I think that he doesn't understand a lot of things. I think he makes a lot of decisions based on how it looks, but doesn't have, I think, the foresight to think things through. I don't think he has the courage to make decisions that are better in the long run that just don't look good today. I don't think he has that kind of courage. I think he does things for show. I think he's a surface person. I don't think there's much depth to him. I think that if you had a conversation with him as just a person sitting at a table, you'd probably get really bored and say, this is a boring person to talk to. Right? I don't find him interesting on any level. I find him insulting to the people around him, almost from the very first day when he had his press conference in 2016 with his cabinet behind him. And one of the reporters said, "Why does your cabinet look this way?" It's like, oh, come on. Like, okay, we know that's a setup question. And all you're doing is pandering to the inclusivity argument going on. And his answer was, because it's 2016. It would be like somebody saying to me, if I had a black friend, a Chinese friend, and a gay friend, why do you have these friends? And I say, because it's 2016. What a slap in the face to those people. The proper answer is, I don't even know why you're asking me. They're good people. That's why they're my friends. They're good people. Like, but to point out how wonderful I am, because look what I've done with the identities here. Look how it was all about his glory. It was all about him, and all those people back there had to stand there as token trophies of his glory because of that statement, because it's 2016. The proper answer, the inclusive answer, the liberal answer, the true liberal answer would have been, without even thinking about it, I don't know what you mean. I selected them based on their ability to do the job. Each one is more than qualified. Because that would have been the proper way to select them in the beginning. You sit down and say, I want to succeed. Let's have a look at some resumes. And you look at resumes without any consideration of skin pigmentation or gender or what they wear on their head. Not him. He chose his cabinet purely based on superficial characteristics of identity for his glory. Right there, at that point, it was at that point that I thought, this is a shallow man who is not a real liberal, and he's not a real feminist. He doesn't understand what feminism means, and I think most feminists today don't quite understand what feminism means. They have it all wrapped up in this Marxist ideology of feminism, and that's not feminism. That's Marxism. Just say it straight. You're not a feminist. You're a Marxist if you're thinking about patriarchy and struggle and oppression. You're a Marxist. You're a Marxist who happens to be a woman. That's all it is. You don't call it a feminist. You're insulting feminists. But this guy's a phony. This guy's a phony. He's an absolute phony. And he's not smart enough to pull off phoniness in a believable way. So, yeah, he's an imbecile. To be honest, he's just an absolute imbecile. So, Americans always have this re-election slogan that they say, ask yourself, are you better off today than you were 4 years ago? Trudeau's been there since 2016, 8 years. Ask yourself, look around. Is this country better off today than it was 8 years ago? With immigration pushing population to the point that housing simply can't keep up, with government-funded drugs for drug addicts, not treatment, but drugs for drug addicts. If 8 years ago, I would have said, well, our tax dollars will go to buy crack pipes, needles, we'll set up safe injection sites, we'll put nurses there, and we'll make sure that the drug addicts don't die so that they can come back tomorrow and take more government drugs. Would you have even believed me? And here we are, because somehow they have this idea that it's compassionate to let people continually struggle, instead of saying, listen, a little tough love. I'm sorry, a little tough love. You want to get better? I'll help you get better, but I'm not going to enable your bad behavior. I'm not going to continue to do it. But here we are. Right? So, yeah, I think he'll probably be remembered as the least effective prime minister ever. And I do think that he will probably leave office as the single most disliked prime minister ever. And I am amazed at even the CBC pushing back on you have press conferences with Liberal members of Parliament saying things, and even the CBC is saying, well, hang on a second, like pushing back, like just it's everyone's sick of them now. because it's just the superficial virtue signaling is just not working anymore. That fad is over. That's run its course. That's done. The idea of not doing anything, but simply pointing out that you're not doing anything. My job is done because I've called you out for not doing it. That's over. That's done. So they've been the party of calling other people out for not doing anything for so long, and they haven't done anything. But I think, you can't get me started on this topic because I'll rant for hours about how much of an imbecile this man is. This kid is. He's very much a kid. Where are we? Will AI threaten CFA jobs? It's a good question. It really is a good question. I don't think so. But, like it's hard to tell because, from where we stand today, it doesn't appear to be a threat today. It appears to be a tool to make you more productive, not something that replaces you. But innovation, she's a killer. Fast forward 10 years, it might be a different story. Fast forward 20 years, it might be a different story. But I will say we can look at education. 20 years ago, the discussion was there that the internet would replace large classrooms and teachers, that universities would need fewer and fewer teachers. Not true. Hasn't happened. Virtual reality would replace the need to show up at a classroom. Not true. Never happened. AI is going to replace teachers. Again, I've heard this cry has been put out there many, many times. Radio actually was supposed to replace professors because you wouldn't need a professor in every classroom. You'd need a professor in one place on the radio, and the radio being broadcast into all the classrooms. TV was supposed to replace the professor. It never did. The internet was supposed to replace the professor. It never did. VR was supposed to replace the professor. It never did. And AI. So is it going to replace non-routine cognitive tasks? The jury is out. There is no demonstrable proof at this point that it can, on a wholesale level, replace non-routine cognitive. There is good evidence that it is a great tool to support non-routine cognitive so that you don't have to rely on routine cognitive people to do certain things. So it can increase productivity, but obsolete CFAs, well, when we say obsolete CFAs, we have this idea that, well, this CFA thing is that these people who have these CFAs are unique in some particular aspect. Not everyone who has a business degree is cut out for business. Not everyone who has the 3 letters is going to be successful. Having the 3 letters means that they worked somewhere for 3 years and they passed 3 tests, but that doesn't mean they're going to be successful. And the lack of those 3 letters does not mean you can't be successful, right? So it is a market signaling device that you have passed 3 tests and you know certain things, but that does not mean that somebody without it is not better than you are. It's just they don't have anything to signal the market with, so they just have to prove it. Are you more bullish on the Chiefs or the 49ers? You got to go with the Chiefs, right? You got to go with the Chiefs. Would you invest in Chinese stocks? Is the market? No, I would not invest in Chinese stocks. Was referring to fixed income after reviewing it. Plan to do mocks. I got 67 average on CFA mocks, but really bad on others. Also, how many days should I keep for the formulas and notes? I get this question a lot, or these types of questions a lot. And I wonder why there is this belief that this is any different than any other exam you've ever written in your life and preparing for any other exam. you have a university career behind you, or a significant part of your university career behind you. You've done final exams before. Come on, we've all done that, where you have 4 exams or 5 exams over a period of 6 days, and you're going to study. And you're pulling off 15 hours of exams in a matter of 6 days, and you do it. So you have a particular way of studying, and we've all lived in dorms before, and we've all lived in apartments with other students before, and we know that our way of doing things is different than their way of doing things. Everybody does it a little bit differently. Think about what has made you successful in your university career so far. You've passed exams. What did you do? How does your brain work? Do that. You don't need, this is not so different that you're lost. You need some guide to say, well, I got an exam. What do I do? How do I prepare? The same way you've prepared for all your exams. The same way you have. Whatever works for you. And it is different for other people. But this should not be a question that requires seeking out an answer from other people. You've had final exams before. You've crammed into your head way more information and written 5 exams that spanned 15 hours than this exam coming up. You've done it. Being that this is at least year 3, you've got 2 years behind you where you've done it 4 times. Each semester, each end of semester, you have your exams. I'm not sure about the global model, but it certainly is a North American model. What makes CFA different, or what gives the illusion that CFA is different, is there are no assignments along the way. So the final exam is everything. It's not just 30% of your grade or 40% of your grade. It's everything. I don't know what my grade is going in, so you don't know what grade you need. And it's also self-study, which means that it's all on you. There was no class that you attended. There was no weekly schedule so that you could see what the pace was. There was none of that. So we have this illusion that this is so different. But in the end, it is your brain learning something, walking into a room, and being tested on it. The same thing you've done for how many times in your university career? This is not new. You've been to this dance many, many, many times. The music may be different, but you've been to this dance many, many times. You don't need to ask me what to do. I would say you've been successful so far. Do what was successful for you. Do that. Do that. Where'd we leave off? Do you plan to complete the derivative series? No, I don't. I don't. 2 reasons why. The big one, it is got a large overlap with FRM. Now, that on its own, big deal. It's got a large overlap with FRM. The company that bought my business also owns FRM. It would be pretty shitty of me to do a whole bunch of that stuff and throw it on a YouTube for free when it is part of the FRM program that they've bought as a business. It would be pretty shitty. After they pay me for my business, I go and do that. And so that on its own, sort of puts it off limits to me. I mean, you got to have some character, right? You got to have some honor. And if somebody is going to do something for you, you got to sort of look at what they're doing and say, I'm not going to step on your toes. That's probably the bigger reason. The second reason that I probably wouldn't do it is, how can I explain this in a sort of easier way? There's nothing in it for me. To sort of put it in a selfish way is there's nothing in it for me. And I've got way too many other things to do. The applied series, I'm in love with that thing. I'm in love with the sector studies. It's there's so much potential there. That spending the time on that creates a hell of a lot more value for subscribers than doing more of this. So number one, uh, I'm not going to step on somebody's toes, and number two, there's really nothing in it for me. So no, I probably wouldn't do more of that. I know these are longer answers than you want, but it helps when you understand the thinking. I have 300,000 euros. I've been thinking to convert them to CAD and buy VFE on a pullback. Does that make sense? Well, first of all, you got to think about the euro versus the Canadian. I don't see Canadian strength over the next 2 years. I see Canadian weakness. I see our central bank having to cut rates, not wanting to cut rates, but having to cut rates. I see U.S. strength. I see Canadian weakness. Now, what about the euro? Well, the eurozone PMI suck. You could almost say the eurozone may be in a slight recession at this point. I just don't see euro strength, but I don't see Canadian strength. It's a tough one on the currency. If I had to bet on a currency getting stronger, it would be the euro over the Canadian, because the euro is a big currency. And since it's a big currency, it is an alternative to the US dollar, because it is a big currency, that I would see that probably gaining strength over the US. So you could be right on the target that you buy, but lose considerably on the depreciation of the Canadian dollar. So once you start to go across border and you're buying a foreign asset, you're buying a structured product, because you're long the currency and you're long the asset. You got to be right on both. Are you shorting call options on SPY or QQQ? Nope. No, I'm not. About 265 June, 220, 265 June 2025 call on SMH. The refugees to Ottawa. Parliament has plenty of space. Parliament has plenty of space, yeah. There's no catalyst to prevent the market from rising. I agree. In the applied series, would you opt to use a portfolio margin account if you were able to, since you're using a well-diverse account, which can give lower margin when using a theta allocation? Well, if you're going to sell any option, you can't have a cash account. You have to have a margin account. You don't have to use the broker's money. If you have your own, you don't have to use it, but you do need an account that is marginable. Let's just put it that. Answering L3 essay and exam day. Is it true to answer the question as simple as possible, as direct and as short as possible? Correct. How do we actually compare dividend yield and bond yield on an apple-to-apple basis? Well, you don't. Dividend yield is not a good measure, because so much of the company's cash flow is retained, so that the dividend yield itself is not a great measure. So you wouldn't compare the dividend yield with a bond yield. No, I now on a REIT you may be able to do that, because the REIT pays out the majority of its net income. It's taxable net income, not its cash flow. It's taxable net income as a dividend. So the REIT might be more comparable, but still not apples for apples. So no, the dividend yield is not a suitable metric to compare on. When you study a new sector or in general any topic, how do you develop a deep understanding? You start with the biggest company in the sector, and you start with their 10K. And then you read and you make notes about everything you don't understand. I don't know what this is. I don't know what that is. I don't know what this is. And then you go Googling that. And then you make notes, and you make notes of everything you don't understand on that term. I don't understand this. I don't understand that. And then you Google those terms. And then you Google it. So you take one thread and you follow it till you complete it. Then you back up and you keep going. You find another thread and you keep going till you complete it. can take a week, can take a month, depending on the complexity of what you're trying to learn. But it's time. 60 to 100 hours to really get a good enough understanding of an industry to say that I'm a novice. 60 to 100, 5 to 600 to say I'm pretty good at this, and thousands to say you're an expert. Like becoming an expert is years with an industry, years, or to take an old number that you've seen thrown around a lot, 10,000 hours, right? 10,000 hours is 5 years to become an expert. But yeah, to get a good understanding of a particular company or a particular industry, a sub-industry, 60 to 100 hours. Yeah, 60 to 100. And those are table stakes. That's just the price of entry. That's sitting at the kids' table, right? At least you're in the room, but you're at the kids' table still. You're certainly nowhere near the experts. It takes years to get there. Student managed investment fund for my college. I have to cover the industrial sector. Do you have any big picture themes to look for in this sector? Well, if you have the applied series, that's already done. I've done the industrial sector. And I think in the industrials, I did cat and deer, looking at the two. Any big picture themes? Well, they're capital intensive. I mean, that's the big theme you take away from that sector is it is capital intensive, which means it's interest rate sensitive. Yeah. Your weekly recaps are one of the best on YouTube, maybe the best. Oh, well, I don't know if they're the best. I mean, I'm glad you get value out of them. I'll leave it at that. I'm glad you get value out of them. I have fun doing them. Some weeks are more fun than other weeks. Some weeks are boring. Some weeks I look around, I go, there's nothing much to say. Rates are doing nothing. This is doing nothing. That's doing nothing. Some weeks are kind of boring, but I enjoy it. I like it when something really interesting happens and I can dig in on one topic a little bit deeper. Is there a video in your applied series that talks about determining the optimal level of leverage to use in a brokerage account? I don't know if there's an optimal amount of leverage to use. Yeah, I don't know about the word optimal. Given that we have very high interest rates right now, margin interest is ridiculous. It's going to be 150 basis points above the cash rate. You're probably somewhere around 6%, if not higher, on margin rates. That's punishing. So you probably are using very limited margin. Not only that, there are so many products that have embedded leverage with the interest, with the real interest, with the SOFR rate built in, that you can get margin at an interest cost that institutions get. There's no reason to pay your brokerage's interest cost. So I don't know if there's an optimal level of leverage. I think that there are unsafe levels of leverage, but I don't know that 120% long is optimal over 130% long over 140. If rates are super, super low and you have a confirmed bull market, lean in, get leverage, lean in. I don't know that there's an optimal level. It's not like it's capital structure where we can think about an optimal capital structure that maximizes the value of the firm. I don't know if there's an optimal level of leverage that maximizes the value of the portfolio. I would have to know the context and the cost of your leverage and what it is you're invested in, because it is kind of a quasi carry trade that you're doing. Yeah. I don't know that I would look for the optimal level of leverage there. Uh, 4 years is dumb. Yeah, maybe 3 years. Yeah, getting a math, stats, or physics degree takes 4 years. Something that is harder in science, I can see if there are prerequisites where you kind of have to go through a pathway, but that can still be done in 2 years on a trimester basis. What do you need a humanities for? What do you need a language for? What do you need all of these prereqs that have nothing to do with the core that you're doing for? We load you up with stuff that you don't necessarily need. My 6-year PharmD is now 8 freaking years. um, I'm just starting my CFA journey with your level 1 material. With tapping into the applied series, be best after passing level 3, working full-time and studying with only so much bandwidth. Well, the applied series is not testable. It's just something that you watch and learn from. That if you're having trouble understanding, I think what it works well for is when you start looking at, especially the sector studies, more so than anything else, but the sector studies, um, seeing how an industry, seeing what the structure of a particular industry is, you can start to relate it to some of the things in CFA a little bit better. It's it's okay to learn something in an abstract way. So if you were learning, well, let's take math. Math is a good example. Um, if you take abstract mathematics, which is a course, there's a course called abstract math. It's not really tied to anything in particular. It's well, as it says, it's abstract. So it's a lot of proofs. It's a lot of theories about something and proofs of theorems. How do you prove something mathematically, on a very abstract way? And then you have, discrete or concrete math, where you're actually applying it to something specific. Uh, when you can see where something can be applied to in a specific sense, it gives you a better understanding of the thing that you've been using. So that if you were purely just abstract, you're kind of missing that part of it. But if you had something more applied, the abstract starts to come into focus a little bit better. You start to see a bit more clarity there, even though it has, by its definition, no real clarity in the sense that it is abstract. CFAI, some of the content is, I wouldn't call it abstract in that sense, but it is sort of disconnected from, well, when would I ever use this? Where would we use this? How does this work? How does that apply? That seeing it done, or taking a break. For God's sakes, just take a break. I'm sick of the CFA stuff. Well, watch the video on the semiconductor industry. It's interesting how, okay, so Intel is here and AMD is here and ASML is here and they sell this, not that. So it helps you understand who the players are. And nothing is more addicting than success. When you start to understand how something comes together and you start to see the layout of the landscape, you go, I'm getting it. I'm getting it. It's this, it just motivates you to want to do more. I'm a firm believer, and even if I wasn't, even if there was no revenue on the applied series, I really do think it should be a level 1 prerequisite that if you buy level 1, you must get the applied series. Uh, I do think that it's that important because you'll use it at level 2, you'll use it at level 3, and then you have a job interview, let's say, and it's in the banking sector. Well, there's a whole bunch of stuff for understanding banks, understanding the Federal Reserve, understanding repos, reserves, the Fed balance sheet, understanding mortgage REITs. There's a whole bunch in there. You're going to work as an analyst for a particular sector. Every sector is covered, and within each sector, I'm going to be adding even more and more of the sub-industries in each sector. But every industry, every sector, I think other than consumer staples, has at least one company that I go into detail on. So that's extremely useful, and it's a great companion to learning book stuff. right? Book stuff is okay. I got to learn the book stuff. But the real world stuff is far more interesting, but you got to learn the book stuff. So it's just nice to get out of the book every now and then and actually look at something. Think about your capstone courses in your business school. A capstone course is like a strategy and policy course that everyone has to take. They're typically case study courses because it is just it's usually a Harvard case study, and all of these Harvard case studies actually happen. They're actually real live case studies. You learn so much more from a case study because there's so many things that come together, and you can see how everything comes together. Well, that's what the sector studies are like. They're like sub industry case studies. Um, where are we? Ranting about the education system is a Sunday night. Yeah. Classes in tech already outdated by the time you start. Yeah, yeah. Tech moves fast. It moves fast. There is no end to your education in tech. There is no end. Once you graduate, you have to say, okay, well, I gotta, stuff I learned 3 years ago in year one, that's gone. I gotta go to seminars and conferences, and I gotta take more courses. It never ends. If you're in tech, your learning never ever ends. As soon as it does, you become obsolete in a couple of years. Haven't met a finance graduate who could tell me the best inflation proxy for my country. Your college rant reminds me of the movie Back to School with Rodney Dangerfield, where he schools the business professor. I remember seeing that way back, but I forget most of it. I think that's where the professor was saying, he says, oh yeah, it was a widget factory. And he says, and you're going to set up here and buy widgets. He's like, oh yeah, you have to grease this politician. Where are you going to get the permits for? Where are you going to get this done? And everyone was starting to take notes based on, it's coming back to me now. Yeah. Yeah, but it's true. I mean, I remember sitting in one MBA class when I was doing my PhD. You audit some classes just to watch the teaching. It's just part of what you have to do. You have to observe. And one professor who was nothing more than a professor, it was an executive MBA, so everybody in the class had work experience. And he was talking about some theoretical thing, and he got ripped apart. And I was at the back, and I was like, "Oh God, can I just?" He'll see me leave. I can't just. But I'm sitting here witnessing it, so he's going to see me witnessing it. But if I leave, he'll see me leaving. What do I do? He got ripped apart by the people in the class, like ripped apart. And he tried defending his position instead of listening, saying, okay, well, you can make the stand. You could say, look, there is a theoretical way of thinking about the world, and then there's the real world. What we're doing here is theory, which helps us structure the way we think. And we judge theory not by its reality, but whether it's useful for us in how we think about the world. He could have defended it, but dug in and got murdered. So yeah, it was ugly. But if you're going to go in a room full of practitioners and you're going to spout off theory, and you don't know how to defend yourself, well, you got what you deserved, right? Let's see. I think the best prof in my school was actually visiting prof. That was actually a statistician practicing in the field. They're always the best. They're always the best because the real world is messy. It's different, right? So it kind of looks like the book, but it's not. I was telling somebody the other night that there is no such thing as a textbook on digital marketing because that industry moves so fast. You can't write the textbook fast enough to be relevant anymore. That any course you take on digital marketing is if there's a textbook, don't even take it. It would have to be taught by a practitioner who is telling you what's going on today, knowing that in 6 months it'll be different. But by the time you put digital marketing into a textbook and get it published and edited, by the time it gets to the classroom, it's obsolete. If it's from 2016, it's obsolete. It's obsolete. So some things can't be taught by an academic. They have to be taught by practitioners. Let's see. What is your take on Musk's request for 25% voting power? So let's say that that I want something, and I have a high belief you're going to give it to me. Why not ask for it? His point, which I don't know if I agree with it. This is the problem with having a CEO of a company who's also CEOs of multiple companies. At what point does the work of the CEO belong to this company or belong to that company? At what point? So his argument is I have an AI company and I'm developing AI over here in Tesla. Why should I? Unless I get, why should I? Why should I not concentrate it over there? Why should I give it to you guys? Like, whoa, 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 conflict of interest here, dude. Um, he's basically saying, I can give it to you guys, but what are you going to give me? That's almost extortion, right? So when you're the CEO of multiple companies and you draw out the diagrams of what every company is involved in, wherever that intersection set is, it's who gets that? Who gets that piece? And he's saying Tesla can have it, but here's what I want. You got to give me 25%. Otherwise, my AI company can take it from here. That's a tough one. Why there's not more outrage and pushback and just jaw dropping over that and calls for his removal is beyond me. Any other CEO who tried to pull that off would be gone. Gone. I don't know. I think he is uniquely positioned to ask for it. So why not? Are you investing only in Canada, US, or looking at equities in Japan, India, Brazil? No, just North America. Do you think India will replace China as a manufacturing powerhouse in time? Yes. Have you seen Barry Sternlick interview a few days ago about real estate market? That office market has existential crisis right now. Yeah, I believe if you're going to office, I'm all there with you. $3 trillion asset class is probably worth 1.8. Yeah, possibly. I wouldn't doubt it. 3 trillion and going to 1.8. I certainly wouldn't be saying, "Oh God, never happens." Like, yeah, that doesn't seem unrealistic. Now, whether it will or not, I don't know. But hearing those numbers, yeah, that doesn't sound realistic to me. Have you heard of the Bed Bath and Beyond bankruptcy? Yeah. While in Costa Rica at the end of March. Oh, we'll be in Costa Rica at the end of March. This is a long shot. Will you be available to grab coffee? Yeah. End of March, I'll be there. Sure. Absolutely. I'm in San Jose. Well, not in San Jose, but if you're going to like one of the provinces, like if you're going up north to Guanacaste for the beaches, that's 4 hours away from me. I'm not going to drive 4 hours to grab coffee. And I wouldn't recommend you driving 4 hours down. It's especially driving at night. It's not a road you want to be on. But if you're in the San Jose area, especially in the suburbs that are just south of San Jose, yeah, absolutely. Hit me up. Absolutely. You can come out to the house. We'll have coffee right out to the house. And by the way, that's open for anybody. If you're coming down to Costa Rica, and you're one of the subscribers on our site, come on down. You can stay out at the house. I have no problem with that. No problem with that at all. Don't move in for a month. We're going to have a conversation. But if you're in town for a couple of days, yeah, not a problem. Started studying for level 2. Do you have any suggestions for how to get into it, such as how to best refresh level 1 knowledge? I wouldn't spend time refreshing level 1 knowledge. What I would do is I would just jump right into level 2, and then I would review opportunistically. What does that mean? You're going through fixed income at level 2 and you say, I forgot what this means. Review that reading from level 2. or from level one. But if you're going through it saying, okay, yeah, when you're reading everything in context, is saying, I get what's going on, then you don't need to review. Review opportunistically. Don't review saying, well, I better get all this done. Now I'm ready to go. Just review as needed. You'll find that you might not even need any review. Do you think is it best time to short US 2000? Do you mean the Russell 2000? Well, that's a good question because it's small cap. I think they have now the highest proportion of unprofitable companies they've ever had. But I think the price shows it. Can they survive at interest rates at this level? They're probably, of companies that need to be refinanced, less likely to find refinancing, more likely to not be able to roll over debt. But shorting's a tough game. It comes down to this: what's your catalyst? You may not see a lot of upside, but just because you don't see upside doesn't mean downside is the natural is the other side of the equation. What's your catalyst? And if you don't have a catalyst, I don't know that shorting is the thing to do. Have you ever traded using a quant or stochastic volatility strategy? No. Or dove into applying stochastic strategies to your valuation? Nope. No. That's an easy answer. What's your opinion on career outlook for financial planners? I don't know. My outlook for financial planners. I don't know. I don't think they're going to go away. I think that there's a lot of people. Sometimes it's hard when you're in the finance industry to think that financial planners have clients, because why can't people just do it themselves? But there are a lot of people who are professional, who have wealth, who don't know what to do with it. They don't understand the economy. They don't understand finance, and it's not their place to do. They're good at being their dentist, their doctor, their vet, whatever it is, the engineer, the executive, but they're not into managing their own funds. I don't know that goes away. But in the traditional role, as you have a generation who is more digital that goes into the 30s and their 40s, are they more likely to be more comfortable with a digital model? Possibly. But I don't know that I have a firm enough opinion about it to say, well, financial planners are a thing of the past. I don't think that's going to be the case. Why do we not use semi-annual effective compound rate for calculating bond price, even though coupons are paid semi-annually? I believe we use annually compounded rate. Well, yeah, the annual compounded rate, because the coupon is meant to be the annual coupon. So 6% coupon paid semi-annually means 30 and 30. It doesn't mean 30 and then $30 and what would that $30.60? The coupons don't compound unless you reinvest. Then they will compound. But it is just a bond equivalent basis. It's it's not compounding. 6% is 6% a year, 30 and 30. That's it. If you weren't paid the coupon and the capital of the bond simply increases by 30, then yeah, now you have compounding, because your bond would go from 1,000 to 1,030, and then you'd earn 6% on an annualized basis on 1,030, and then it would compound. But being that you're paid the coupon, your principal still remains just 1,000. If you take your coupon and buy more, well, okay, but there is no implied contract when you receive your your interest that you are going to buy more. That's up to you. You can create your own compounding, but in the absence of it, you have been paid interest. Your principal is still the face value of the bond, period. So it does not compound, I guess, is the easiest answer there. Any thought for Canadian residential REIT like Minto? Well, they're all in good areas, right? Minto, I think, extends from Ottawa right through to Toronto. I think might even step into Montreal a bit, into rent right around Toronto, down Hamilton Way. I think goes out towards Kingston area. It's hard to see how they can't do well. It's hard to see how they can do poorly. Would be a better way to say it, given that you got to live somewhere, and we are bringing in way more people than we have place for. You got to live somewhere. So, yeah, I think they continue to perform for years. How economically feasible is it to buy the index ETF and short the underlying assets? Exploit? Not feasible at all unless you're a significant institution. Not feasible at all. Not paying transaction costs the way that you would pay it through a retail account. No. In respect to just a general no. In respect to the portfolio management as a retail investor in your series of lectures, is there any particular limit on money and time invested that would not make that worth it? In terms of small size, yeah, I think, if you got small accounts like 2,000, 3,000, it's very, very difficult to put some of those strategies into play. It's very, very difficult. 2,000 is not the basis for investing. Most people who open a brokerage account with 2,000 are gambling. They're not investing, they're gambling. It's like going to the casino with $2,000. It just takes longer to lose your money. And it's very difficult to turn 2,000 into 10,000 into 50,000. It's unless you have a contribution plan and a period of time. It's very difficult to do. So yeah, I'd say that I don't know that I would be trying very much with less than 25,000. Right. That's, to me, that would be the minimum on a small account. How are you feeling about commercial real estate? Negative. Lots of talk about it being so low, but so many workplaces are pushing return to office. It's true. It is true. And I think for the vast majority of people, work from home is not going to be their best work. A lot of people, I'd say about 70% of people need structure. They need structure for their own set. They need, and a lot of people crave structure. The unstructured work at home sometimes is not going to be beneficial for them, that they would perform better in a structured environment. So I think of the business I had, I'd say half the people would have been let go with work from home. That after a couple of months, it would have been, no, I'm sorry, it just, this is not working out. Because I know they would have gone home and it would have been 3-hour days, because I just knew, you just know it. Just with the way some people, even in a structured environment, operate, half would not have made it. Of the rest, the lack of structure would have been difficult for a couple of them. And then there were some that would have been just okay. Right. But if they're not there, the ones that need structure would not have the structure. You needed them there to provide the structure for the ones that needed the structure. You also needed them there to provide the example for the ones that, if they went home, would have worked 2 hours a day. because behavior is infectious. If you're in a room of people behaving a certain way, you tend to behave that way as well. So without those people there, when you think, well, but we have people who can work from home. And if you send them home, what you're left with are people who have no guidance and no role models. So you almost can't have the ones who work from home because the ones who need structure would now not have structure, and the ones who need behavior examples would not have behavior examples. So the whole thing would fall apart. So you do need your stars in a place where people can see them, or you need an organization full of nothing but stars. No, you're not going to get that. You're not going to get that. No matter how well you recruit, you're not going to get that. Period. So work from home, I don't think is beneficial for any company. It may be beneficial for you because it is the better deal. But the deal is you give me so many hours of your life and I'll give you so much money. That's the deal. You want to stay at home, then that's not a deal for you. Right? My opinion. Where are we? Do you think January through the jobs number is fake? No, I don't think it's fake. It doesn't fit in with the ISM employee. Yeah, but I don't think it's fake. I don't think we have fake data. I think we have models that aren't capturing short-term dynamics well enough. That over time you got to wait for the revisions. But I don't think the data is blatantly just flat out fake. I don't believe that. No. Do you have a video on ZB and Treasury Futures and Applied course? I do. It's in the Applied Options course under Futures and Options on Futures. Go into that folder and you'll find it in there. Could you share what you handle? Could you share how would you handle personal inheritance tax for your U.S. based assets? I take the position of I'm dead. I don't give a shit. If there's an afterlife, I'm probably way more amazed with what's going on there, and they don't take money in the afterlife. So I'm not going to need what I leave behind, and I'm dead. If there's nothing, I'm dead. If there's something, I don't care. I'm in a different place, and I want to check this place out, but I don't think they take money. I wonder if I would still be dressed. Like, does your soul wear clothes? Or would I be naked? And would I care? So many things to think about. So many things religion doesn't have the answer to. Would you be naked in the afterlife? Would you have clothes? Why would you have clothes though, right? Would they be the clothes you were buried in? And if they were, well, then you better think a lot about what you want to be buried in, right? The right colors. Do colors go out of fashion in the afterlife? I don't know. Oh, deep philosophical questions. Inheritance tax on U.S. assets. My assets are all being donated to, or being given to a university to fund two research chairs. I believe they are tax exempt. So I believe any inheritance would be tax exempt on that. I have no friends. I have no family or children or relatives or anything like that. I have a few friends that I have carved out little things for, but the bulk of it is going to a university, a specific university, for as many research chairs as it can fund. Not administrators, but research chairs, which attract graduate students. That's the power of the research chairs, because it's funded with enough that that professor can attract graduate students, because they can then afford those graduate students. So being that it's not given to any one individual, I'm not too concerned. All right. Let's say that I was diagnosed with some illness and I was given 2 years or a year. I would give away the bulk of everything before I died. The only way that my will is going to matter is if I die suddenly. If I see it coming, if I know it's coming, I would be giving away most of it anyways. I'd be giving away. I'd be giving it away, and I'm free to give away money to whomever I want to give money to. I'm free to do that. So it really only is in an unexpected situation. But I do live in Costa Rica now, and I have been threatened. So who knows? I may disappear one night, right? So who knows? I think I just got threatened by somebody who was trying to be a big man. You know how people are. You better watch it, pal. I'm a black belt. It's like, okay, no, you're not. No, you're not. It's that kind of thing. I think it was just some bravado telling me to watch myself. Okay. Would reading the CFAI books, volume 1, 2, and 3 be a good idea if you have no plans to write the tests or become a CFA certified, but just want to be good at reading? Yeah, I do think it would. And you could probably skip things like ethics. You could probably skip the quantitative methods. I mean, it's not as if you're going to be doing any research. You just want to be a better retail investor. You could skip a lot of the tools, a lot of the methodology tools altogether. But it does get technical, right? It does get technical. So the question would be, being that you're reading for personal knowledge, would you be willing to push through the technical stuff and fight your way through the technical stuff without there having to be a cost for it? There's no downside to quitting. It's not like, it's different when you're studying for a test, because now you will push through it. Would you willingly push through it if you didn't have a test? Once it started to get technical and a little difficult, would you still push through it? Right? That's you might not. So, it might not be what you think it is, because as soon as you hit a wall where you go, oh, I'm not getting this. Well, since there's no cost to walking away, you would be more likely to walk away. Do you recommend a career in sales and trading? I got a job offer in S&T, although my desire is to be an equity analyst. And can I move to an equity analyst job from sales? Not really. It's not an entry job into analyst. It's not like you start with sales, and sales is divorced from analysis altogether. Sales is very heavily relationship management. You're not analyzing anything. No, it's not a runway. It's a different career altogether, and it would not be job experience that would qualify for the CFA designation. Some differences between applied series, which are already posted on your website, and paid one. Oh, okay. So there is some applied videos which I had done years ago, where you take some concept from CFAI and you apply it. Just a small little thing, but I no longer add to that series. And I think there were like 20 or 25 videos, and they were about little, small little things here and there, and that was it. The applied level is a different thing altogether. Maybe I should change the names of them, because they sound like you're getting the same thing, but you're not. The applied series that comes included with all CFA stuff, it's just about 20 or 25 videos showing how you would apply something from the real, like we read something in CFA. Well, how would you apply that? So I show different ways to apply just very specific things. But it is not an applied level in the sense that the applied level is in that we go into a lot of detail about specific things. They are two different things. Yeah. Any more videos on poems on the way? Yeah, the Raven is next. I think the Raven is is really good. There's a really good lesson in the Raven that we can all follow. But I have three videos to do. I have the Fed balance sheet left to do because I did understanding repos, understanding reserves. The third is understanding the Fed balance sheet. I have the telecom video to do, which is done. I'm just waiting for AT&T, Verizon, and T-Mobile to publish their 10Ks, to post their 10Ks on the SEC site. As of Friday, they weren't up yet. So as soon as I have the 2023 10Ks, I'm ready to go. And then I'll do the Raven. And then I have to run and do the 2025 level 3 because registration for the February exam opens May 16th. March, April. Yeah, it gives me 2.5 months to get that done. I don't know if it'll be enough time because so much changes for level 3, but I will be, every year I do this. This is the third year for the applied level where I take off 4 months, 5 months, and I do the CFA stuff, and then I'm back at it again. But 3 more videos will be up before I have to run. Maybe more, depending on when I get the content. People think Fed cut would be bullish. However, wouldn't market forecast 5-6 cuts only happen if recession takes hold and therefore bearish? Yeah. Fed cuts so aggressively if economy remains strong? Probably not. I think the catalyst for more than 3 rate cuts comes from inflation dropping faster than they think and threatening deflation. Let's remember in 2018, 2019, I don't know if you recall this, but the Fed said that they are relaxing their 2% inflation target because they just weren't getting inflation. They were going to allow inflation to run hotter than 2% for a period of time. That was just 2018, 2019, that they were willing to let it run hotter for a period of time because they weren't getting it. It's the pandemic that caused the grief. But if you go back to just before the pandemic, we weren't getting any inflation. We're returning to that. I don't see where we've structurally divorced ourselves from that. Potential trouble brewing in CRE. Well, it's not potential trouble, it's trouble. And if trouble brews, do you think that residential CRE will be swept in? Hard to say, right? Will it be contained or will it not be contained? It's very hard to say until you actually start to see it happen. Back in 2007, 2007, I think, there was a belief that subprime was contained to subprime markets, that it wasn't going to spill over. And most people thought that that was true. But spill over it did, globally, fast and big. Commercial real estate, is it going to be isolated to just the regional banks in commercial real estate, or will this cause a cascading effect that will spill over into the general economy? That's very hard to predict. But to not have any concern about it, to me, is troubling. To say, oh no, it's not going to happen, would be, like some concern would be reassuring. But to have no concern is concerning. And I don't think we have any concern that it could be anything more than just the market that it's in. What do you think of the Fed's interventions during every period of weakness? It obviously has a smoothing effect, but is it the correct thing to do, or does it create a bubble like so many on social media seem to think? Well, they have gotten more aggressive since 2008. That's the playbook now. I don't think that they're going to say, look, we need to stop doing this. I think they're going to say, look, it's worked in the past. Let's do the same thing. I don't. There is an evolution over time in the way things are done. I think, this is just a natural evolution to the regime that we're in, and in some time we'll evolve to something else. But for now, I don't know that I would say that playbook is dead. I'd say that playbook is very much in play. Is it the best that we got? Is it helpful? It would be much more helpful if you had the fiscal and the monetary. But the fiscal is full of jokers. Like the people we elect for government now, you can't count on them to do the right thing. You can't count on them to do the right thing, period, which means the monetary has to carry everything. So I think the better question is the fiscal sustainable, not the monetary? Is the fiscal sustainable? Can we continue to elect idiots and have idiotic policy and mounting debt year after year after year after year? That just makes the central bank have to do more. I don't know that we blame the central bank on this. I think we blame the fiscal on this. The fiscal has abdicated their responsibility here. Why did agency MBS plummet? And why has it been rallying now? Well, it is going to change when interest rates change. But day to day to try to find a reason every day, much of it is the randomness of the market. What would you say is a reasonable reason to leave a job? Just lack of satisfaction. You got one life, man. You got one life, and that's it. How long do you stay? Now, there's an economic reality to the life that you have. So you can't just say, I'm quitting my job. I don't like my job. Screw it. I'm going to move on to something else. You have responsibilities. You got to pay bills. But if the job that you're in lacks any kind of satisfaction at all, well, then that is unsustainable in the long run as well. That you may be able to put up with that in the short term, 6 months or a year, but you know it's going to end. And the longer it goes on, the uglier the ending will be. So that means you need to start thinking about either you're going to find satisfaction in the job you're in, or you're going to go. Going sometimes does take courage. What will I do? Where will I go? How will I survive? How will I get along? You may not always be able to line up something else. But that's a reasonable reason to leave your job, is just a lack of satisfaction. I mean, I can think of a whole bunch of reasons why you'd want to leave a job, but that in itself is a reasonable reason. I managed a career in oil and gas. Currently work in the financial services industry in an area with no oil and gas opportunities. What are some actions you recommend to fulfill this goal? Start a new career search. Just start looking, right? I've applied to jobs, reach out to those in oil and gas, but to no avail. Usually this is where you work your social network, right? The people that you know, and you work that. I guess I would also say, what have you done to make yourself attractive to the oil and gas industry? What do you know that they're willing to pay you for? What can you do that they're willing to pay you for? Tesla is probably the most liquid options. Tesla, Meta, Apple, Google, they all have very liquid options. Could you explain real estate crisis in Canada? Is it wise what real estate crisis? Which one? Is it wise investing in Canada in this market? Well, that's a big, broad question. I like Canadian residential REITs, multifamily REITs. That's it. I have difficulties in completely listening to you because there is no English sub provided. If possible, could you consider about adding it? That is out of my control. Yeah, that's out of my control. I get that. I get that the lack of subtitles can be a problem. We've looked into it in the past, but I use the full screen when I write. Subtitles would cover the bottom quarter of the screen, which would cover the very writing that you need to see. Trying to get subtitles in a box below it, I've seen it done, but that requires a script and timing. That's very hard to do and very time consuming and very expensive to get done. So, but it is out of my control. Any thoughts on why ABR gets no respect? I don't know. It just gets no respect. It could be because they are financial assets. So they are worth their book value. That the franchise model it has no value. That maybe that's what the market is saying, is that yes, they've done well, but they'll only do as well as their balance sheet allows them. There is nothing inherently goodwillish about the company, that if you bought the company, you would buy it for its book value per share, because there's no franchise value in it. That ABR doesn't have a brand name that gives it any advantage over any other company that's doing this. So you could make the argument that it's not just ABR, it's any company whose balance sheet is financial, whose assets are financial assets and liabilities are financial assets, would have very little brand value if they're not a large bank. I can buy that. But to not even be given the benefit of the doubt about something, to have to sing for their supper to have to prove again and again and again that they have the management skill to get things done. That's what I mean by no respect. That they're not trading at $30. I don't mean that. I mean that the slightest little bit of trouble, down they go, because of the assumption that, oh, well, you can't escape the gravity of your industry. When they've shown again and again and again and again that while they can't escape the gravity, they're not victims of it. No respect. No respect. They gotta dance and sing for their supper every quarter. Hope Costa Rica is good. Studying for level 1. Derivatives are a challenge, especially when combined. I get confused with usage and payoff visuals. Well, practice. Time with it and practice. Nice to see your video today. I was wondering if you have any thoughts regarding interest rates in Canada, inflation rates, and its effect on home market. We have a structural shortage of housing in Canada. So interest rates aren't playing the role that you would typically expect interest rates to play. Higher interest rates, much lower valuations. We have a real estate market that is soft because of the nature of our mortgage industry. 25-year amortized 5-year terms. You're going back every 5 years. When you get a mortgage, it's the stress test that you have to be stressed at higher interest rates, and if you can afford that, then you get a mortgage. So higher interest rates haven't really depressed property prices as much as what one thinks that they should have, but it has hurt demand significantly. But that still doesn't change the fact that we have a structural shortage of housing. So the government, the feds are saying, let's lower the cap on international students. And just recently, I think in the last couple of days, they said, we're going to extend the ban on foreign buyers for another 2 years so that foreign buyers cannot buy a property here. Little fixes like that to try to fix the damage that they caused by bringing immigration to levels that were unsustainable, given the social structures we have, given the infrastructure we have, and given the housing market that we have. I don't know if you saw the numbers last week from, I think it was StatsCan, that showed the number of immigrants arriving to Canada over the last how many years, how many leave. Record numbers We've never had as many immigrants to Canada leave as we do now. Record immigration, record emigration. They are leaving because they're being brought in without any consideration of whether or not they're going to be successful when they're here. And they get here and there's no housing. They can't afford housing. The job market is not what it was promised. So after a couple of years, they say, "This is not what I was told. This is not the dream," and they leave. I mean, that has to be a sign that something is broken there, right? But uh, housing, I think, is going to be a sector that is well supported for some time. And I think as soon as the Bank of Canada starts cutting rates, I think we're going to be okay. I think housing probably goes on to print new highs, higher than it was at the peak in 2022. I remember your rants about Apple and Microsoft. I absolutely love those. What are your thoughts on the Vision Pro? My rants on Apple had to do with that terrible, terrible operating system they rolled out. What was it called? I forget, but it was just crap. It was crap. And I was saying, if you're going to give me Microsoft quality software, in other words, crappy operating systems, you got to charge me Microsoft prices, which means the computer's got to be $400, not 3,000. But they fixed their operating system, so I'm still buying Macs. But at that time, it was just like, if this is what you're putting out, if this is where you're going, this is garbage. What are your thoughts on the Vision Pro? I haven't seen it, haven't used it. I don't think I'd pay $3,500 for it. What's the use case? Like, okay, yeah, if I were in a store and there was a Vision Pro in a store, I'm going to stick it on my head. Let's have a look at this. And I might even say, this is really neat. But then reality would set in, and I would say, okay, well, I don't have time for this nonsense. I don't have time for video games and stuff like this. How does this fit into my life, and how does it improve what I'm doing? And I think right now the answer is, well, it doesn't, and it won't. So until there's applications for it, I'm not seeing the point. How to draw on paper. Have to draw on paper takes time and does not come to me intuitively. Does improve over time. I don't use those payoff charts. I don't use those. So does it come to you over time? It does. It does. But I mean, I don't use them. I don't find them useful. I will work as a portfolio manager in 6 to 7 years time horizon, and concerned I won't be able to make quick decisions when time comes. No, you will. Because you're not just going to be handed an entry level job as a portfolio manager. You're going to work your way up, and if you don't have the skill that's going to be necessary, if you don't develop the skill naturally, then you'll never be that. I don't know that I would try to find ways to be intuitively faster. Intuition comes from experience. It will just happen on its own, or it will not happen for you. But to try to force intuition, it just comes on its own. Your thoughts on current job market? I don't know. I'm very far removed from the job market, so it's just not something that I would have advice on. Nor would I think that anything that I say would be relevant. Any thoughts on Australian market economy? Other than knowing that it has a heavy leaning towards materials, not really. I know that government debt is almost non-existent there. It's way more than manageable, and I think it's been, other than the pandemic, I don't think Australia's had a recession for like, what, 40 years, 30 years, 40 years, right? And if China falls off and India rises, you're right there. I mean, it's, instead of going to China, you're going to India. I mean, it's right there. I don't know that it affects Australia too much. Does your teaching help a forex trader? No, I don't know that there's anything that can help a forex trader. Certainly not in the short term. Forex is a random walk in the short term. Random. It's random. You are trying to make sense of randomness. So technical analysis tends to be highly used in Forex as an attempt to make sense of randomness. And that's what lines on charts do. After the fact, say, well, look, there was some pattern to this randomness. Well, all randomness has a pattern after the fact. But you can't play that side of the chart. You got to play the hard right side of the chart where the ticker is. And stop. Where's it going? This way or this way? All the lines you drew on the chart. I find that to be a bunch of nonsense. Because all you've done was tried your best to put some kind of pattern to randomness. Currencies in the short term are highly random. I don't know that there is. I think Forex trading training is an oxymoron. So, what policies would someone have to support to get your vote? Are there any politicians, Punzi, you think have good ideas? What policies? Stop punishing success. Stop demonizing success. Start elevating success. I mean, that's just it used to be that way, but now we punish it. We chase it away. We scare capital away. California is feeling it. Chicago, Illinois is feeling it. New York is feeling it. You can read these things every day. California is going to be facing a major tax shortfall. Why? Not because not because tax rates have come down. It's because money is left. Like it just seems to be idiotic to continually punish those with the capital needed to grow your economy. Stop with the incessant calling people of names. We're a racist country. We have a racist. Every country has a bad history. Find me a single country in the world that is not built on the bones of some other defeated nation. That's the history of the world. And to make everybody today guilty and responsible for history is the dumbest thing. There's not a single country that escapes criticism. Every nation today, every nation is built on the bones of some other defeated nation. Every border of every country on this planet is drawn in blood. It's a bloody history. It's an ugly history. It's a human condition history. It's nobody's fault. We're all victims of a history that is that of today is nobody's fault. That nonsense has to stop. That utter nonsense just simply has to stop. That I just can't accept that. That's just ridiculousness. I think I would get on board with a candidate who just stopped talking about skin pigmentation, who stopped talking about all that stuff, not punished it, but just stop talking about it. That doesn't mean exclude it. It just means stop talking about it, for Christ's sake. That's how you get everyone past it. You stop talking about it. Balance the budget. For God's sakes, balance the budget. If you haven't got the money, don't spend it. Don't spend it because it's not yours. It's mine and my neighbors and my mother's and my father's and yours and your neighbors. It's our money that you are spending in this ridiculous profligate way. No, there should be a balanced budget law. I would get behind that. Any candidates that we will balance the budget, period. I would get behind that. Any candidate with courage that says, look, there's going to be some hard decisions that need to be made, but the state has gotten too big. The state is in all of these different places, and the state does not need to be there, right? Big government. You got to make the state smaller. But I think sensible fiscal policy, and stop engineering a society. For God's sake, who are you to decide to engineer a society. Let society's natural evolution engineer itself. But when politicians start engineering the society, engineering the ideology, engineering the way you can think, what you're allowed to say, what you're not allowed to say, that is a pathway to fascism. And Canada, I would say, over the 8 years that Trudeau was there, if you look at what fascism looks like, I'm not saying Canada's fascist, but we are far more fascist today than we were 8 years ago. If we were going to say, well, what is the checklist for fascism, and you went through it, and you say, well, we're way over here. Today we're closer. Not that we are fascist, but we are more fascist today than we were 8 years ago. This is not a direction for a country to go in that wants to compete with a neighbor like the US that is technologically superior, that has far deeper capital pockets than we have. It's not a way to compete with economies that just don't care about DEI, that are not going to waste a whole bunch of money on looking good, without worrying if we are good. Let's just look good. It's this nonsense that has to go away. This sheer nonsense that you see your tax dollars and your tax rates keep going up, and you look at the policies and what our politicians are concerning themselves with, and they're concerning themselves with something that happened 125 years ago on an island in the north. Give it a rest. There's not a single country out there that hasn't got a history drawn in blood. All right. And if you really want, look, I live in Costa Rica now. And if you really want to see structural inequality, where the poor are poor and they will always be poor, come to Costa Rica. If you're poor in Canada, I'm sorry, it's probably a big part of it is probably your own fault. If you're poor in Costa Rica, yeah, you're poor in Costa Rica. It's probably not your fault, and it's probably doubtful you'll be anything but poor. It's structural. It is structural. You have people who are successful who will not pay their tax. You just don't pay your tax. You don't pay it, which there's no way the country can get out of the suboptimal equilibrium if these successful people decide that we're not going to pay our tax. You have a vested interest in this upper group of people who almost control the country to continue to control the country, even among the politicians who are, well, let's face it, as my lawyer told me, even if you paid your property tax, it's not going to go to where you think it's going to go. It's going to go to some politician's pocket. It's not going to go to where you think it's going to go. If you're poor in Canada, that's a large part of it is your fault. If you're poor in Costa Rica, it's not. There's a lot to be outraged about, but not here, not in the US. It is possible to move from one level of society all the way to the other level and back down. It's not that easy in Costa Rica. If you're poor, you're poor. You're poor. It is almost impossible to get out of that without getting out of the country. It is almost impossible. So when I see politicians, in countries like ours, and I see citizens in countries like ours shitting all over it, and suggesting that if you're poor, it's not your fault. It's those people at the top. They're keeping you down. No, they're not. My God, they're not. Not here. Come down to Costa Rica, live there for a while, and you will see what true structural poverty looks like. I wonder if anyone from Costa Rica is on listening. The immigration people are on listening going, this guy's not getting his residency. This guy's not getting his residency. We don't like what he just said. He's not getting his residency. I should be more silent on that issue until I have my ticket, right? Can you name 3 publications an individual with no investment knowledge should be reading every day to prime themselves for the journey to CFA? Wall Street Journal, number 1. Barron's, I think, is a good one. Number 2, Barron's. And The Economist. I still like The Economist. I would say that those three are serious pieces. Yeah, I'd say those three are serious. I don't know that I would say that they have. They're not like New York Times, Washington Post, heavy leaning towards one side. I don't know that I would say that they're ideologically driven. So that when you read something, I think that you're getting facts above ideology. I wouldn't say that for Washington Post or New York Times. I think there you're getting ideology before facts. Um, yeah, those three. Most valuable lesson you've learned in entrepreneurship. You're not as smart as you think you are, and you don't know half of what you need to know. Period. You're not as smart as what you think you are, and whatever you think you don't know nearly enough. Always learning, always learning. It's not what you know that's going to hurt you. And it's not what you don't know, but that you're aware that you don't know that's going to hurt you. It's what you don't think you know, or worse, it's what you think you know to be true that is not true. Always be learning, always be questioning, always. You are not as smart as you think you are. Once you start learning about something, you begin to realize that you know nothing about this field because it's big and it takes years to the point where you say, okay, I recognize I'm an expert in certain things and not in those things. Um, that's probably the biggest lesson that I've learned throughout life is that no matter what you think you know, you're not as smart as what you think you are. Don't ever close the book and say, I'm done. I'm done. I'm good. No, no, no. It's endless. It's endless and it goes on and on and on. And if you're in the market, it will humble you from time to time. No matter how good you think you are, you will be humbled. You will wake up one morning and think, I haven't got a fucking clue what I'm doing. How could I be so wrong? Everybody goes through that. All the best go through that where the market just humbles them. It just humbles them. And if you say it hasn't happened to you, one of two things. You're new at this or you're lying. it's you're new at this or you're lying. Period. Period. Because if you say I've been doing this for 10 years, I've never been humbled, bullshit. Bullshit. You're lying. Ask any veteran out there and they'll say the same thing. Oh, you're lying. You will be humbled. And there's nothing wrong with talking about it. It is going to happen. Everybody has been humbled. Everybody. It's the one common connection that you have that when you talk to somebody else, you know that they have been humbled as well. And there's this comfort in knowing that, well, it's not me. It's not just me. This is the game we decided to play. So, yeah, that'd probably be the biggest lesson. Let's see. Where do we leave off here? Oxyput premium is 12 cents. Is it worth really to expose yourself to buy that much? Well, I wouldn't. No, you don't have to take that month's put. I mean, February expiration is too close. You'd be looking at March expiration and then look at where Oxy is and look for either a 20 or 30 delta put. What are your top three favorite books of all time? Top three favorite books of all time. That if I were on a deserted island, what would I want with me? Well, the first one's kind of a cheat. It's the complete works of Shakespeare. Now, it's a book. You said top three books of all times. It is a book, but it has the complete works of Shakespeare in it. But it is a book. I would want that one. Paradise Lost. Milton's Paradise Lost. And my Bible, Thus Spoke Zarathustra, from Nietzsche. Those would be the top three. All of them all of them really are the common theme about them is the insight into the human condition, and an idea of how to think. Okay, so we have this human condition. So what? Like, how do we think about it? Uh, you have different ways of um, yeah, just different ways of sort of conceptualizing. Well, what does it mean for me on this journey in this world to be human? Will I accept somebody else's definition of morality? Whose definition of morality? Why would I accept that definition? What was the purpose of that morality? Right. So you question more fundamental things, and it just the exploration of your own existence. I think more people need to, I think, do that to be more aware of who they are. And when you become more aware of who you are, um, that expression, you need to learn to love yourself. You really do. You really come to say, you know what? I'm all right. I don't care what other people think. I'm okay. And when you become that way, um, I think it's only at that point that you truly can live a free life, because you are freed from your own from your own burdens that you've simply adopted by going through life, by simply adopted what other people have said. And, oh, I have this obligation, this, and I got to be this way and act this way. It's like, oh, hang on a second there. Who says who? Says who? Right? You should come to your morality on your own and not have it handed to you by some religion, or some society or some culture, but come to it on your own. And you may come to the same morality that it was, but when you come to it on your own, you can't do that without exploring the human condition, mostly your human condition. And it's never done. You're never done with that, because life tests you all the time. Life tests your belief systems all the time. That you may believe something and something happens, and you think, maybe I didn't believe it. Maybe that wasn't true. Maybe it was all bullshit, but it tests you all the time. Do you think Polyev would be a good prime minister? He did say that, he did say he would balance the budget. And yeah, he's going to be better than Trudeau. Would he be a good prime minister? I don't know. Would he be better than Trudeau? And right now, I don't. I think a jackass would be better than Trudeau. I think no government would be better than Trudeau. That's the problem. If he does what he says, if he balances the budget, just that on its own, if he's fiscally responsible, society will take care of itself. Society always takes care of itself. If he's fiscally responsible, I think that would be a very good thing. I don't know that we can say that he would do that, but he says he would do that. Okay. Already read that. When are you going to realize the transcendence of the crypto market? Never. I'm curious what you think about the addition of the practical modules. I think that's a step in the right direction. I do think that it's a great way to begin to walk towards becoming a more applied designation. Not so textbook knowledge-y, because it is right now. Most of what they have can be found in almost any finance textbook. So anything you go through in level 1, level 2, level 3 equity, you'll find in almost any textbook. Level 1, level 2 quant, so any textbook. Corporate finance, any textbook. It's very textbooky. There is no knowledge that is proprietary to CFAI other than ethics, let's say, or GIPS, the standards. But other than that, economics, fixed income. None of that is proprietary to CFAI. You can get that knowledge in any textbook. That if they became more applied, suddenly they now have something that is more proprietary to them. And I think that matter. I think that's far more important, to not just say you could do this, but to say you shall do this. Here's how we will do it. Here are the steps we go through. Here's what you do. I think what would be fantastic is at level one, you pick a sector and you pick a company. And over the 3 levels, you build out a very detailed financial model of that company, applying everything you learn in every module that you go through. So when you get to level 2 and you're doing quant and you're doing time series, well, let's break out the time series for revenues and see what kind of model it follows. AR1, AR2, what kind of model does revenue follow? And actually use it so that when you're done, you have 3 years of financial modeling behind you, right? I think, and you followed the same company for 3 years, and you followed a sector for 3 years. I think I see that would be a great evolution to the program, because now when you've finished after those 3 years, you've got a financial model that becomes a template for other companies that you want to do as well. And you know a sector, and you know an industry, and you know a company, and you can talk intelligently about that. And when you get hired, you already have 3 years of financial modeling experience behind you, as opposed to having none of it behind you. So bravo, it's about time. I think the next module that they should put in there is a paper portfolio that you manage for 3 years. You build a portfolio for 3 years. You have quarterly reports. You demonstrate your Sharpe ratio, your drawdown ratio. You do this over time, and that there is some kind of applied concept or applied mark that's given to that you must, at the end of the 3 years, demonstrate with a report that you've done this, along with your spreadsheet model of the company that you've done, for a pass or fail on that. I think that would prepare a candidate for the job market more than passing 3 exams from stuff that is in every textbook out there, because it is all textbook stuff. There is nothing proprietary to CFAI when it comes to the knowledge that they have. But this could be. Do you see what I'm saying? That could be more powerful as a learning tool than anything else, is the applied stuff. I'd like to see it go that way. I really would like to see it go that way. If it goes that way, I think, unfortunately, for the prep provider industry, I think it would hurt a lot of the people in the industry, because now you would have to be practitioner oriented to be able to teach that stuff, not just repeat stuff you see in a textbook. That might hollow out that industry a bit. But the fees that we pay to CFAI as prep providers don't end up being a big revenue source for CFAI. That if anyone from CFAI is listening, I would encourage them to make decisions about the evolution of the program without worrying about the industry. The industry will adjust on its own. You don't have to worry so much that, well, if we do this, we do that, many people won't be able to compete. Don't worry about it. Evolve. But I see that those are much more powerful learning tools than words on a page. Much more powerful and much more useful to me after 3 years. Well, I say 3 years, you can do it in 18 months, but after 3 levels of learning, to have a very detailed spreadsheet model with 15 tabs across the bottom. I know how to do time series analysis. I know how to calculate my cost of equity under a whole bunch of different scenarios. I think it would just be far more beneficial if the CFAA program went more practical, because then they would have proprietary knowledge, not repeated textbook knowledge. And the candidate would be far better off. With the yield curve inverted for this long, at what point does the signal just become useless? Yeah. it becomes useless just before we're all reminded that, oh, what were we thinking? Of course, we should have seen this coming. So it's when everybody believes that it's useless is probably when it suddenly becomes very useful. I think the better way of saying it is, given the level of financial sophistication in the market and the ability for so many companies and individuals to hedge out interest rate risk, how relevant is the interest rate anymore, right? How relevant is it? Applied series is absolute gold. I agree. I totally love it. Makes sense. You're not going for the next derivative services. Oh, good, good. Advice on building confidence as a young banking professional. I don't know that I would have information or advice that is specific to a young person in banking. Oh, well, it's this and this and this, but only if you're in banking. Confidence is built with experience over time. It just naturally happens. It's just built with experience. Understand that most people are average. That's how you get the average. If most people were above average, the average would be there, right? Most people are average. Most people are not willing to put in the time. If you're in the office before them and if you leave the office after them, if you love what you do, if you're putting in the time, you will become better. It's intimidating seeing somebody with many more years of experience are way ahead of you in the way that they see things. But remind yourself that they're average, that they're more than likely average at what they do. It's just that they have a 3-year head start on you. And if you're better than average in 3 years, you'll be better than them at that point in time. So that gives you something to build on. But confidence comes with time. Confidence comes with experience. Is it wise to leave a job to fully focus on level 3? No, no. There's no deadline for level 3. There's no deadline. It's not as if I need to get this done and I'm going to quit everything else to get this done, because then you now have to go out and get another job. No, I don't see that. No, I don't know that I would quit my job just to focus on level 3. I would just give myself more time for level 3, and there is no expiration. It's not as if you got to get it done the next year. Otherwise, you lose level 1 and 2. Take your time. How do we actually compare earnings yields of equity against the bond? Okay, I already answered that. What are your thoughts on Michael Burry? Do you think if he started today to do what he does, he would still be as good? Everybody in their career, everybody usually has one big giant thing that makes them, and then a whole bunch of small things along the way. There's usually one big giant thing. Maybe he's had his one big giant thing. And he might be good at what he does. But had he not had that big giant thing, he might be good at what he does, but you've never heard of him. There are many people you've never heard of that are good at what they do, but they've never had that one big giant win. That's pretty common. That there's usually one big thing in your life that defines you. If there is two big things, that's pretty impressive. So somebody like Steve Jobs, that's pretty impressive. Apple, then Next, which got bought out by Apple, then Pixar, which got out by Disney, then back to Apple and resurrected it. That guy's had a couple of good innings in his life. Warren Buffett's another one. Elon Musk is another one that has, SpaceX and Tesla. You can't deny the success of them. I can complain about the valuation of the company, but I cannot deny the success of it. Impressive, absolutely impressive. But there are very few people who have more than one big win, and there are very few people who have one big win. That anybody who's famous usually is because of one big thing that happened, which opened the doors for them to do other big things. But had that not one thing not happen, they might be good at what they do, but never heard of, right? In terms of opportunities. Yeah, okay. What do you think about 210 steepening yield curve inverting in coming weeks? Yield curve uninverting in coming weeks? If the 210 is steepening, the yield curve is uninverting. Yeah, that would be the 10-year yield rising. I don't know that you'll get a full uninversion unless you get rate cuts. Yeah, unless you get some rate cuts. I don't know. Maybe the 2 to 10 might uninvert, but the 3-month to the 3 to the 10 probably would not invert until you get rate cuts. That's still over 100 basis points inverted. What are your thoughts about wealth advisors pursuing CFA charter? Why? Unless you're managing assets or unless you're analyzing equities, you're not going to get the 3 letters. I mean, you can do level 1, 2, 3 exam, but you have to have the 3 years work experience. And it's not just, well, I've done wealth advising for 3 years. I don't think that qualifies. I think it has to be in some capacity you were managing assets or you were analyzing equities. If you're just a relationship manager, why? Right? If you're not going to be selecting assets or analyzing them, but you're just going to recommend model portfolios that are designed by the in-house team, and you're just managing the relationship, why bother? I'm not seeing that would be of value to you. Household versus establishment survey, do you think is more accurate right now? I think they're both inaccurate. I think the truth is somewhere in the middle of the two. But if I had to lean on this last one in one direction, I'd lean more towards the household than the establishment. I'm starting my corporate journey with an intern in a pro shop named Future E First. Any book to recommend for fixed income trading? No, there isn't a lot on trading, like fixed income trading. There's not a lot there. There is one English guy who writes a lot in the fixed income space. Let me tell you his name. You probably want to look at his book on yield curves. There he is. His name is, and I gotta try to find a way to scroll to the beginning. So I say it to right. Moorad, Moorad, Chowdhury, Choudhry. Murud Chowdhury. He writes in a very accessible way. I have a couple of his books. They're good. He writes in a very accessible way. He's more practitioner oriented than academic, although he can hold his own with academics. For fixed income trading, you'd probably want his book on understanding yield curve dynamics, because if you're fixed income trading, it is the yield curve. You're trading the yield curve, really. So I would recommend his books. Let's see. Will Applied Series cover the health services industry? I did. I did the healthcare sector. And then I did the U.S. Supply chain from the manufacturers through the distributors. There's only really 2 big distributors. And on the other side, you have the PBMs and then the healthcare providers. The healthcare providers pretty much own the PBMs. And then how all the discounts work and how all the rebates work through the system. So we understand the role of the manufacturers. We understand the role of the distributors. For the manufacturers, what is the role the biologics, biosimilars, and the uh, there goes my brain does that every now and then. It sees a word on the table that I'm going to use, and it takes it and hides it and says, "You looking for this word?" Um, I'm just going to call it an off-brand name drug. When a drug loses its patent, it's just copied and it's off-brand name. There's a word, and it's such a simple, obvious word, but I have these losses of words every now and then. Obvious words, I'll remember it when I least need it. But it's yeah, I do have something there for that. If we're talking about healthcare services in the sense of United Health, MetLife, things like that. No, I haven't really gotten into them. Why is the front entrance very similar to Canadian Home? Is it? That's a big, heavy door. That is a extra wide, big, heavy door. I don't see that in many places. I spent 10 grand on that door, just on that door alone. It's got 3 separate latches. When you lock that door, you are not coming in that door. It's heavy and it's thick, and you're not coming in the front door. You're gonna have to come in a window because you're not coming in the front door. Does every Canadian home look the same? You know what I found is the architecture. I think you're right. The architecture really is specific to a region. There's not a lot of thinking in the Canadian homes. They're built for heat preservation. So they tend to have the bedrooms upstairs, where I am in Costa Rica. They're not built that way. They're built in sort of like 3 stages. You enter into the entertainment sector, and the bedroom wing is on one side and the service wing is on the other. So your kitchen, everything will go that way. Your bedrooms and everything are that way, and you walk into the entertainment thing. Here in Canada, you sort of walk into a foyer first, and you have your living room and everything over there. You have your kitchen here, but your laundry room there. It's almost as if there's no real thought about how to segregate things in the house. Also, when you come in, it's cold. So you tend not to have living space when you first walk in. That you walk in, it's usually your big foyer that you walk into because the cold air has time to heat up before it enters the rest of the house. So climate probably has a big thing to play with the type of architecture that you have. But I don't know that we have in Canada very many architecturally beautiful houses. In Costa Rica, in some of the neighborhoods you go into when you're looking at the bigger houses, some of them are just architectural masterpieces. They're art. They're just beautiful. What part of technical analysis does actually work? What part does actually work? I don't know if I'd say it actually works as much as it is more useful. The simple things tend to be the more useful things. So moving averages, the 50 and the 200, I think are useful, and simple lines of support or resistance. Beyond that, I think it's nonsense. Beyond that is nonsense. Those, and I don't even know that those work. As much as they're easy things to look at, that if there is something in them that all the other people are seeing, it will cause them to act in a way that maybe it has some value. But RSI, MACD, Fibonacci bullshit crap, Elliott wave stuff, that's all nonsense. It's all nonsense. It's all an attempt to make sense of randomness. It's all pure nonsense. My opinion. Right. Signing up for level 1, coming from an engineering background, I've never seen majority of the non-math stuff. How has the difficulty of the exam curriculum changed now since 2010s? Easier. I will say that has been a disappointment, is the more technical things have been eliminated. The content has been, let's just say it, dumbed down. It has been dumbed down over the years. and more mistakes in the curriculum exist today than have ever existed before. Dumbed down with more mistakes. Sorry, CFAI, but that's just the truth of the matter. I mean, you can't be unaware of that. You can't be unaware of that, right? That's it. 31, working as a sailor in insurance. Do this since I graduated. Seriously thinking about switch and pursue career in finance. Already signed for level 1 in August. Okay. There was no question there, just a statement, but okay. I watched your Understanding Reserves video over the weekend. Can you please elaborate on how the Fed lowering the IORB would increase the supply of reserves? The interest rate on reserve balances, the lowering the rate on interest on reserve balances would decrease reserves, wouldn't increase reserves. It would decrease. If you're lowering the interest on reserves, those reserves will seek out a return somewhere else. So if you do want to lower the reserves, lower that rate, and banks will be motivated to find a place to put it. So if money market rates are higher, they'll move into that. If repo rates are higher, they'll move into that. But if you're paying interest on reserve balances to the point where I say, why should I work? This is free money. If I go over there, I get what, 2 basis points more, and I got counterparty risk. Why should I? Why should I? I'll stay here. So you would lower the amount of reserves. What do you think my chance to become an AM or PM in this industry? Most people I know said it's late, but most of them don't have CFA. Living in China. I don't know. I don't know. I'm very far removed from the job market. And of what I do know, I know nothing about the Chinese market at all. Like nothing. So I couldn't even begin to answer it other than just an uneducated guess. So I just lost the feed again here. Let me see. Where did we leave off? Where did we leave off? Look at all these questions here. How long have we been on? Pushing up on 4 hours. Look at this. I'm looking at the feed. 3 hours. Okay, we're gonna hop off here soon, but there's a lot of questions here. Why don't I start from the bottom and work my way up? How's that? On your series on understanding reserves, you mentioned the cash in vaults and ATM as part of reserves. Correct. How does the Fed pay interest on those vaults? Well, they don't pay interest on those. You pay interest on reserves left at the Federal Reserve. That's it. If they're in vaults or ATMs, they still count as reserves because it's cash not lent out, right? But it's cash for liquidity purposes. So it is still counted as reserves in terms of the overall reserves that are in the system. They're just not in the Federal Reserve. They're not with the Federal Reserve. It will always exist no matter what. Any tips on how to use a Python PSM to get into Fin? Again, I'm far removed from the job market. Let me figure out. Some of the questions are follow-ons for other questions here. Let's see if I can figure out where I left off. There it is. When I said effective interest rate, I meant internal rate of return for amortization. Oh, that doesn't change. IRR increases for a discount. MBS if there's prepayments, but decreases. Okay, so you talk about MBS, not a bond. Okay, so that we have some clearing up on this one. The internal rate of return. Well, an internal rate of return is a money-weighted rate of return. So if you put out $1,000 now, and you get $1,000 back in a year, or $1,050 back in a year, you can calculate what your money-weighted rate of return is. But let's say instead of $1,050 in a year, you put 1,000 in now, and you get 100, 100, 100, 100, 100. You still get the same 1,050, but you're getting some of that money sooner. Because your return is money-weighted, your IRR will increase if if your cash flows happen sooner. That's just time value of money, right? So if you have prepayments, your money weighted rate of return would be greater. Money sooner is worth more. You still own your old home. Yeah, here it is. I moved. I just haven't sold this home yet. Let's see. Do you mind explaining best tactic to prepare for the structured response section? If you have our subscription, there are, I think, almost 30 to 40 hours of live structured response seminars as you go into the exam. 30 to 40 hours. And I'm in the middle of them now. I got, I think, 5 more left to do, 15 more hours. Believe me, I am talked out when it comes to this. And it is nothing I can answer in 3 minutes. It is several hours to really go through it. What is your opinion of what's coming in March, considering the bank term funding programs ending in March, the Fed meeting as well, and the fact that the March reserve repo will be nearly empty? They're going to have a discussion about balance sheet runoff. So if you continue to run off the balance sheet, you will hit reserves. Reserves will drop as fast as the balance sheet drops, unless they start with repos. Unless the Fed starts doing repos, they will drop. I think it's just a natural thing to have. Oh, look, it's really simple. They just have to start tapering QT and at some point stop it. But that was going to happen anyways. I think their number is 2.5 trillion. Reserves are 3.4. I think 2.5 is probably where they want to stop. And reverse repo is 500 billion. So they got 1.4 trillion at runoff of 95 trillion and 95 billion a month. You got 1 trillion over the next year. So you got about a year and a half, but I don't think they'll let it go that long. I think 2.5 trillion is where they want to be. I don't know. They might think 2.6, 2.7. Thoughts on high yield debt? Credit spreads widen. Yeah, well, it's hard to say if they shrink. They're so small now. It would seem more lucrative to capture upside on rate cuts and credit spreads tightening. Yeah, usually you don't have rate cuts and credit spreads tightening. Usually they work in opposite directions. So I don't really have a thought on that. Could you donate to my college tuition? I was happy to take 120. Could you buy Magnificent Seven blindly for the next 5 years and yield 70+% annually, pretty much generate very little downside and forget ETFs? That's one person's opinion. I don't know. Only reason these companies would fail is the complete collapse of the world economy, which would mean you're screwed either way. Well, that's true, right? Work from home was terrible for me. I was significantly less productive. What are your thoughts about buying cybersecurity stocks? CrowdStrike, ETF. Yeah, I don't think that's going away, and it is a predator prey coevolution, right? That the better they get, the better the criminals get, the better they have to get, the better the criminals get, the better they have. It's not as if you'll win. It's just this coevolution that goes through time. I don't think it's going away, and with more and more of the world becoming digital, it becomes more and more important. Let's see. It's sort of cyclical. If you believe they'll be okay. How's the pup doing? If he's not sleeping, he can get some FaceTime. There's no pup here. Although I do have dogs that visit me in Costa Rica. They just show up. They just show up. They're not mine. You turn around and there's a dog there. It's like, oh, wow, hey, how you doing? They hang out for a couple hours and then they disappear. So I do have dogs that show up. We got to find you a wife. What have I ever done to you? Really, that you threaten me like that? Got to find me a wife. No, when I was younger, I found somebody that I could really hate, and I gave them half up front, and I avoided the whole marriage and divorce thing. Let's see. Equal weight index S&P 500 return is negative. Big cap 7 might be a bubble. Well, yeah, if you look at last week, S&P was up, I think, 1.4%. The equal weight flat was flat. So yeah, I think you have something there that there are a few number, a small group of stocks that are skewing the returns, but it's been that way for a year and a half now. But if you're buying the index and they're in the index, it doesn't matter. Here, it doesn't matter. Will the index go up? Well, if these go up, they go up. Yeah, but it's not. It's hard to say that this rally is broad based and inclusive. I think the last number I saw was like 260 stocks are up for the year, but 240 some are down. Like it's half and half, and that the equal weight has really gone nowhere. So, yeah, that might be something to look at. I really like the Marcus Academy YouTube channel you suggested. Can you suggest other places to find high quality content? I don't find too many. I just don't find too many. So not really. When will the U.S. fiscal debt turn into a crisis? Good question. I don't know. Powell mentioned in an interview today that in the long run it will cause a crisis. I'm looking for your last comment. Your last comment was another Indian, and Powell mentioned it will cause a crisis. Don't know that I would have said that, but okay. I know. You didn't mean that comment. You meant something else, but there it was. If we have 4 quarterly payments in a year and have been given the annual compounding rate, wouldn't we have to convert it to quarterly rate before calculating present value? No. You'd convert if you had an annual rate that was paying you quarterly. If you wanted to compare it to what a quarterly compounding would be, you'd have to convert it to that. But you're not getting compounding on a quarterly coupon. You're just getting for the payment divided by 4 each time. It's up to you to reinvest it to get the compounding, but you're not getting that. Okay. I don't know who's talking to who here. Also relevant. These were dozens of negative earnings. Okay. I think people are having conversations on their own. None of these are pertaining to me. Can you tell us how you made it despite your difficult upbringing? What drove you to strive for success when you could have easily accepted mediocrity and acted like a victim? Acting like a victim is sort of a modern day thing. It's a recent thing. There was no acting like a victim. That didn't get you too far. The woe is me, woe is me. That's the self-pity journey you go on. That wasn't a thing. That wasn't a thing. It just wasn't a thing. I don't know that I would say that I when we say difficult upbringing, it wasn't, I mean, I've mentioned it many times. I didn't have parents. I grew up with a grandmother who later in life, you learn that she was an alcoholic the whole time, which really explained a lot of shit. Later on, when you found out, I was like, it wasn't me. Okay, that explains a lot. I was always a good student. I think I had that going for me, is I was just always a good student. Yeah, I didn't always stay on the path. I wasn't always walking in the light, you could say. I mean, I had periods growing up where you're hanging out with the wrong group of people and you're not going anywhere fast. But I was smart enough at least to know that beyond the novel, after the novelty wore off, that I'm not going anywhere here. I can see that I'm not going anywhere. So I was always smart enough to always come back to my strength, which was what I had here. Um, and it wasn't obvious that I was going to be successful at anything. It wasn't obvious when I was younger, in my 20s. It wasn't clear that I was going to be successful. But what was clear and what was obvious was I never gave up. I never just stopped and said, "Oh well, I can't do it. I don't know how anyone else is being successful. I can't do it. It's for everyone else, but not for me." I never once did that. And some things worked, and some things did not work. And I did well, then I didn't do well. Then I did well, then I didn't do well. And it's not just one pathway up. It's and you bounce, and you bounce, and then it's um it's just having uh, a drive that says, I don't like where I am, and it's got to change, and no one's going to change it for me. No one's going to, and I'm not just going to sit around saying, woe is me, look at my childhood, this is where I am, give me stuff. I deserve stuff because what? Right? Because I was so unique. I'm not, that story is more common than what you think, by the way. That story is far more common than what you think. But it was, yeah, you go through some bad periods in life, and you do get to that point of, ugh, you get down on yourself until it becomes boring, until the self pity becomes boring, and you say, enough of this. I don't like where I am. I don't like this. I don't like where I'm living. I don't like what I'm doing. I don't like the people around me. And you change it. You just decide one day that this is not where you're going to stay. Period. And you change it. You start thinking about, okay, you break it down. This part of my life, where am I going? This part, where am I going? This part, where am I going? And you start working towards it. Period. And even when you're doing that, it's not clear that you're going to get anywhere, but at least you're moving away from where you are. It was never clear that I was going to be as financially successful as I am today. That was never clear. 20 years ago, if you would have handed me a piece of paper with my current net worth on it, I would have just laughed. I was not for me. For other people, maybe, but not for me. I mean, I won't be poor, but I won't be that. But you just don't give up. You improve every day. Maybe it's not every day. Maybe, looking back, you romanticize things a little bit, and you say, well, I worked hard. I walked to school, no shoes, uphill both ways in the snow. You ever hear an old man tell you that? And they didn't. It's just you romanticize the past, and you think that somehow you had a lot more to do with your circumstances than maybe what you had. I would say this. Luck is everywhere. Luck is nothing more than opportunity and preparation, and it's everywhere. When people say, "Oh, there's a certain amount of luck involved in being successful," yeah, luck is opportunity and preparation. That's all it is. That's what luck is, and you make your own luck. The more you work on yourself, the more you prepare, the luckier you will be. That's all. So if it doesn't work for you the first time, you do it again, something else, and then you just keep going. As long as you give everything you're doing, as long as if you're doing something and you give it your best shot, then yeah, and you stick with it until it's clear that it's not going to work out, then that's fine. But I think my gift and my curse in life, because it's everything, every gift you have is a curse. All right, every gift you have is a curse. I think my gift and my curse was I was willing to try everything, uh, which wasted a lot of time trying some things I shouldn't have tried. But had I not tried other things, I never would have gotten anywhere with certain things. So, um, Yeah, I always had my mind, and yeah, I've been in bad places, but recognizing that I don't want to be here. You change it. You simply just change it. You put up with a bad situation until you wake up one day and you're just bored with it, and you're bored with being bored with it, and that's it. You change it. It's for New Year's. I put out a series of 3 poems. The first one was "Stopping by Woods," Robert Frost, followed by "Risk," followed by "A Psalm of Life," and I've been in that poem, "Stopping by Woods," several times in my life, where you get to a point where it's like, I can't keep doing this. I can't keep doing this. And then that's why those ones mean so much, and especially the one with "Risk," is that it's very short, but it just says, the risk of staying here has now become greater than the risk of leaving, and that's when life changes. And if you're open to the change, yeah, I mean, that's what it was. Nothing is linear. I guess that's the point here. Is nothing was ever linear, and nothing was ever clear. But that doesn't mean you just say, "Oh, well, it's not guaranteed. I'm not going to do it." No, there are no guarantees. There is one guarantee, that if you do nothing, you're guaranteed to stay exactly where you are. That's probably the only guarantee that life has for you. Um, we should finish up here soon. What do you think of investment consulting firms like AON, Mercer, TELUS? I don't know. I don't know too much about them, so I can't really give too much. University students are failing and protesting at Algoma University in Brampton. Um, mm, yeah. Sheridan has a big component of international students as well. I know when I was leaving there was this small thing creeping in of, don't fail anyone. Like, that wasn't said in so many words, but the message was, don't fail people. What are your thoughts on small cap stocks? Challenged, and I think that until interest rates come down, I don't know how successful that investment would be. Including Canada, both become worse and worse. Made a good decision to leave. Thanks so much for your videos. It's been monumental, improving my financial knowledge. Wondering, what are your thoughts on the role of PM as passive securities become more competitive? I think that's why we have such a large growth in alternative investments. Is I think active managers are probably thinking the alpha is in illiquid investments, are in inefficient markets. As more and more markets become more efficient, as more money comes into more markets, it's harder to generate alpha. And I think that investors are probably wise on that, thinking that, I mean, I can just grab indexes. There's all sorts of alternative beta indexes now, and factor indexes. I can get whatever exposures I want. So you have a big growth in alternative assets, and I think it's twofold. It's money looking for alpha, and it's managers looking for fees. So being that level 3 now has a private assets stream, that'll be interesting. It'll be interesting to see what kind of treatment they give. I haven't seen it yet, but I think I'll get to see it in sometime in the next month. I'll see it. I think that's the first section that I'll do, because it'll be new. I think that'll be the first section that I get ready for 2025. But it'll be interesting to see how they do it, how they handle that. But it is, I think, alternative investments is probably where active management will go. It has to go, because it's inefficient. It's illiquid. You need active management. If you were in the mid-30s, how would you approach investing today? don't know that I'd approach it I don't know if there's a particular way I'd approach it just because it's today in your mid 30s that would be any different than when I first started. It's simply start. Just start small. Don't use a lot of money. Whatever you start with, you're probably going to lose, but that's the cost of education. That's the tuition fee you pay for life. So start small and just build into it. Or paper trade for a year. You make different decisions with paper than with money, though, so it's hard to tell whether or not your paper skills will translate into real money. But I don't know that it is so different today. Oh, there are different companies, there's different technologies, there's different metrics we use, but I think it still comes down to the same thing: is looking for value, right? Let's see. If you were in mid 30s, got that. Viceroy reports about ABR CLO performance does not fit with the surveillance reports regarding delinquencies. Well, first of all, Viceroy is not really trying to write a serious article. They're trying to write enough to scare the hell out of you that you will get out. They're trying to push the price of the stock down. It's not an intellectual performance that they're giving. It is a scumbag performance. They're scumbags. They're dirtballs. This is what they do. It's not real. I wouldn't spend a lot of time on it at all. In the applied series, I took a much more intelligently written short report on ABR and ripped it apart. That if you go through that and you go through how I rip it apart, look at Viceroy and you go, but this is a joke. This Viceroy is a joke. I can tear this apart easily. Yeah, that's the point. Beating up the kid on the playground is not as fun as beating up the bully. Beat up the bully, you can beat up the kid. This is the kid on the playground, right? On politics, what do you think about isolationist views that are starting to rise in the US and UK? I don't think they're isolationist views at all. I think what there is a mix-up on is culture versus people. Okay, so a culture is a way of thinking. A culture is a way of acting. What we sometimes confuse is culture for people. That in a particular region, there may be a particular culture and a cohesive population such that we think that the people are like that, there's something wrong with the people. We don't want those people here. No, probably a correct statement is we don't agree with that culture, right? So to give you an example, Eastern cultures find North Americans extremely selfish. The idea that we live in these big houses, but that we would put our grandmother or grandfather in a home and not care for them ourselves in our own home is completely foreign to them. Is why? What kind of person are you that would do this? You're a greedy, sick little human being. And it's so shocking to them, but we don't see it as immoral. We don't see it as cruel. It's just, yeah, they're better taken care of there. They have certain needs. They're better off there. There's nobody home during the day. We live in a society where two people work, kids go to school. It would be crueler to leave them here, right? Because we don't have these extended families that we live with. Well, you can't come here and start judging me by the culture that you came from. That's not the culture here. You have to judge me by the culture in which I am in. So it's not as if we white people are just cruel and selfish. This is the culture that we're in. And if you're going to live in this culture, you can't measure me by yours, because I'll tell you what, I'll take my moral yardstick out and you won't measure up either, buddy boy. You need an enlightened mind to separate the skin pigmentation from the culture. You need an enlightened mind. Most people aren't enlightened, so they attach the two. And they say, we don't want those people here. Those people don't believe in what we believe in. Those people don't share our ideals. And then we think something less of those people because of that. And then you get these not isolationist, but less willing to accept other people kind of attitude because of that. So you have to, when you go to another country, for all the people out there that want to move to the US or Canada, you will do yourself a huge favor by when you go through customs, check your culture. Check your culture with customs, because you can't measure this culture by your culture, because two things will happen. We won't measure up and you won't measure up. You won't measure up to us. We will think something less of you, and we won't measure up to you. You'll think something less of us. And then we'll never be able to get along, and we'll each blame each other's skin pigmentation when it has nothing to do with that. Nothing. It has everything to do with culture. For example, I'll give you another example. There is, in Western culture, there is a belief that Muslim countries treat women badly because of the lack of rights that women have. That's measuring them by our culture. However, they look over at us and they say, we can't believe that you have so little respect for your women, that you have so little respect. You'll let them leave the house and let men stare at them like that. How are you letting your daughter and your wife do this? Like, what is wrong with you that you have so little respect for women that you would do this? You see what I mean? Right? They look at that and they think there's something deficient in us. And we look at them and we think there's something deficient in you. It's culture. It's just culture. It's different cultures. That if we walk around the world with our Canadian yardstick and we start measuring people with our Canadian yardstick, they're not going to measure up. But we won't measure up to theirs. Check your culture at the border, man. Check your culture at the border. That goes both ways. If you're a Canadian visiting another country on vacation, check your culture at the border. Since I've been in Costa Rica, I've learned that very quickly, that if I'm going to measure the people there by what I find to be moral, I will be disappointed again and again and again and again. So when you see a certain behavior repeat and you think, oh my God, is it everybody that's like this? You have to stop and say, well, hang on a second. It can't be everybody. Everybody can't be bad people. There must be something I'm missing. And what I'm missing is it's a different culture. That you have to first of all say, well, what is the culture here? And within the culture, these are good people. But taken out of the culture and put into another culture, they're not good people. But bring us over there, we're not good people, right? So the danger is saying these brown people over here are just bad people. These are the people you don't want to be around. Stop right there. It's a cultural thing. It's not anything more than that. You must first learn the culture. And when you learn the culture, you say, I get it now. Okay, I get it now. I see what's going on. You may not agree with the ideology, but you can't suddenly condemn a whole group of people as being immoral because you just disagree with their culture, right? I think that we could get along a lot better in the world if we all had the ability to separate the person from the culture. And if we all agreed that I'll do me and you do you. Don't come up to me with your yardstick and I won't come up to you with my yardstick. How's that sound? You do you and I'll do me. It's just some people have a problem doing them and letting you do you. They feel that, no, I'll do me and you'll do me. You'll believe what I believe or you're immoral. You'll believe what I believe or I'll call you names. You believe what I believe. And that's where problems start, is when we demand that other people believe what we believe. Because who's right and who's wrong, right? So the problem I think that some countries are having is you're having people that are leaving particular cultures, not because they dislike the culture that they're in, but they see no opportunity where they are. and they want to go to some place that has opportunity, but they're not divorcing their culture. They're just divorcing their country. So they come into another country and they don't understand that, well, wait a minute, there's already a culture here, and you're coming in with this culture, and these two cultures don't line up. So somebody somewhere has to give up something. And I think that a lot of people who grew up in particular cultures, who've invested in that culture, are tired of always having to say, we accept other cultures, but they take no time to understand ours, that we're always making adjustments for other cultures, and and not and not being understood, that somehow we're deficient if we don't make room, if we don't continually make room. Uh, I don't see it that way. So I'm in Costa Rica now. I do not believe that it is incumbent upon Costa Ricans to make room for me. I think it is incumbent upon me to be acceptable to them. I'm the minority. It's their culture. I'm the one moving there. I can't walk in and start wagging my finger in people's faces saying, you don't measure up and you don't measure up and you better change your behavior and you're all insulting to me. Where's that going to get me? You have to understand their culture, and you have to say, okay, well, the first thing I need to do is be acceptable to you. Not that it's incumbent upon you to accept me, it's incumbent upon me to be acceptable to you. I think if more people understood that, then you wouldn't have all of this pushback that's happening today. But when you come on in and you shove your culture down our throats and say, you're racist and you're this because you're not respecting how we live, it's like, no, hold on now. You're not respecting how we live. You're the guest here. You're the one coming. So you see how that all can get started. So what you're seeing is not so much that the world is far more racist today than it ever was. No, the world is far more mobile today than it ever was. That this always existed, but not to this level, because you didn't have this level of global mobility. Now you do. And yeah, was that a really long answer to probably what was a really short question? BBA graduate 2023, planning to do level 1 November 24. I often compare myself to my friend who has already completed all of his 3 levels. How can I stop comparing? Don't compare. Comparison is good. Comparison is motivating. As long as you're comparing yourself to the right people, right? Social comparison can be helpful. Social comparison can be dangerous. Having a role model, there's nothing wrong with having a role model and aspiring to be better. I think Steve Jobs is a great role model. I think Elon Musk is a great role model. I have no issue with the guy. I mean, I've been critical of the valuation of Tesla, but you can't be critical of the guy. There are lots of good role models out there. But be careful who you compare yourself with, because some people are way out of your league and you shouldn't be comparing yourself with them. Your benchmark is yourself yesterday. That is your best benchmark. As long as you're better than yourself yesterday, there you go. So benchmark yourself against you, but you should still have some signpost at the end of the road that says, I want to be like that. I want to be like that. But I know that I can't compare myself to that person today because I'm not there yet. I haven't earned that. So I'm going to compare myself to myself last week or yesterday or the year before. And as long as I'm further ahead down the road, great. And when you get further down the road, that person that was your role model might have been swept aside. And no, it's that person now that's my role model at the next stop. So it's okay to have social comparison, but temper it with personal comparison as well. I always consider that a bit. What are your thoughts on Argentina? It's hard to listen to his address, to what he said at the UN and not say, yeah, I mean, yeah, I think he's right. I think he said a lot of correct things. Can he turn it around? That's it takes courage to do it, and it's risky, right? If you don't have the right people in the right places that want to go along with you, that's a problem. And again, I'll use Costa Rica. There's a lot of corruption in Costa Rica. Tax dollars do not get to the people that it needs to get to. So you have this structural poverty. And if you do try to change anything, you will be killed. I'm telling you right now, you will be killed. If you try to separate these corrupt people from their cash flow, you will be killed. So how are you going to fix it? It takes courage. It takes courage, and you need the police on your side, but they're in on it too. They don't want to see it end. How do you break a cycle like that in a suboptimal equilibrium when the forces of power are the ones oppressing? Now, if you're trying to find true power dynamics where there are oppressors and oppressed, yeah, there are countries to do that. It's certainly not the US or Canada or the UK or France or Australia or Japan. Those aren't the right countries. That you can criticize them is a testament to the level of free speech and tolerance that they have for you. Try that. Try that in Costa Rica. If I stood up in Costa Rica and said, this is enough, they're not paying their property tax and they're not paying their property tax and they're not, bang, I'd have a bullet in my head before I pointed to the fourth person. You can't, right? You can't. Can he turn that around down there? If there are vested interests in place that don't want it to happen, then probably not. Not for lack of trying, just for lack of safety. I don't know, but doing more of the same wasn't going to work. Doing more of the same wasn't going to work. So maybe it needed some outsider with what other people would think, well, that's common sense. It seems like common sense. Maybe that is what you need. I don't know. We'll find out. DEI isn't necessarily a bad thing. Nothing is necessarily a bad thing. A gun is not necessarily a bad thing. An idea is not necessarily a bad thing. Nothing on its own is a bad thing. As Shakespeare once said, nothing is either good or bad. Only thinking makes it so. It's how you use it that determines whether it's a good or a bad thing. So, scientific research is not a bad thing, but it can be used. It can be used for evil. Nothing is necessarily a bad thing. But when it's engineered, it has negative consequences. When you have diversity, it's not a bad thing. It's how you get it that determines whether it's a bad thing. And it's the type of people promoting it that determine whether it's a bad thing. The two worst things to have, the two worst things, is an ideology and a belief that you have the moral high ground. An ideology on its own is not dangerous. But combine it with the belief that you have the moral high ground and it justifies all sorts of evil. The Inquisition, the Spanish Inquisition, did not believe that they were evil. They really did believe that they were saving your mortal soul by torturing you to death. That was the only way. They believed they had the moral high ground. Mao believed he had the moral high ground. The Cultural Revolution in China was not an evil man. It was a movement of people who believed they had the moral high ground. They had the moral high ground. The worst atrocities through history are committed by an ideology held by a group of people who believe they have the moral high ground. That's the worst. That's wokeism today. That's the liberal left today. Is not only do they have this ideology, which is not necessarily bad, but it's perverted by the belief that they have the moral high ground and that the conversation is over, and that if you don't subscribe to their religion, you're somehow a radical right-wing white supremacist that has to go away. And they do believe that they're doing it for the good of everyone. They believe they have the moral high ground. That's the dangerous thing about these people. Not their ideology, but their belief that they have the moral high ground. Because no matter what you say, you're wrong. The conversation is over. There is no other way to think but my way to think. You're wrong. I have the moral high ground. I'm trying to help you. You must believe what I believe. See how bad that gets? That's a walk towards fascism. And what we're seeing today with especially with Canada and Trudeau is fascism from the left, a very fascist way of thinking. You can protest, but don't protest the government. What did Trudeau do? He invoked the Emergencies Act to shut that down. You can ask questions if they're good questions, but if you're critical of the government and you ask questions, you will be arrested. Chrystia Freeland and the reporter who tried asking her questions, the RCMP officer stood right behind the guy, so the guy walked into him because he was walking backwards and arrested him for assault, engineered the assault to arrest him while she walked away smugly smiling, knowing that they had rehearsed that technique. That doesn't just happen on the spot. That's a rehearsed technique on how to stop a reporter that you don't like. We'll engineer an assault. That was practiced. That's a fascist government. And they believe they have the moral high ground. They truly believe that everyone else that doesn't believe what they believe is absolutely evil. That's fascism. So DEI is not necessarily bad. The people who hold the views and their belief system is what makes it bad. And right now it's being hijacked by a group of people who are fascist, who are just bad people overall. And DEI has to go because the people who hold the view has to go. It's a shame that sometimes good ideas are held by simple-minded people who are evil. People who are generally against DEI are people who will benefit if it's removed. No, that's not true. DEI is further reliance on the state than free market. That's not true at all. Well, there we are. It's one of you, I guarantee, believes they have the moral high ground. We need Trump back, though. We can't have Biden controlling 4 more years. DEI is the wrong. Okay, well, let's move past all this. Small caps right now already. This, let's see. Okay, I think, yeah. I think we're done. I think that was 4.5 hours. I think I've paid my dues here. I think that's done. Mark Meldrum should sell all his CFA business and become a. I did sell. I did sell it. But you still got to put in, the handoff time. It's 5 years, right? Every man, wherever he goes, is encompassed by a cloud of comforting convictions, which move with him like flies on a summer. I like that, Bertrand Russell. I like that. All right. Okay. We'll call it a night. I'll do this again in a couple of weeks, maybe. But ciao, everybody. I'm going to hit the end stream button here. Yeah. Ciao. Good night.